weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the number that's flashing on the top of the screen. You can also call us, speak to us, as well as our guest on those said stock-related queries as well. But before we do all of that, it's a very, very good screen to watch. So let's take a quick check of how the markets are doing, because you've seen gainers, especially like Grasim today on the index Nifty 50. And while you've seen some correction from the day's high, pull up the Nifty 50 heat map and that'll give you that perspective as well. Now, we've lost about a 60 to 70 point uptick that we were maintaining throughout the day. So the last hour of the trading session becomes very, very crucial. You're seeing Grasim, Indigo, Apollo Hospitals, Bajaj Auto and Trent are some of the big gainers for today. In terms of the losers though, you're seeing some impact with a 1% downtick on Tech Mahindra, Bajaj Finance, HUL, Tata Consumers, as well as Kotak Mahindra Bank. So those kind of stocks are continuing to be under pressure with a percentage downtick. But when you look at the sectoral heat map, that'll give you also some perspective of the portfolio, and defense, realty, small cap, energy, as well as healthcare are continuing to see the majority of the gains as well. So very even Steven as of now, slightly more tilted towards the gains, and in the advanced decline ratio, that continues to show you that perspective as well. For the broader markets though, where you're seeing individual movers dominating the news flow, you're seeing 1600 advances and very, very slightly, very slowly those lines are getting closer. So you'll watch out for that. And in terms of what we've seen in the BSE 500, all individual stock movers today, there have been plenty on results. Jubilant Foodworks, now Bosch as well is disappointing the street, but Jubilant Foodworks, PI Industries, Bosch, those are the three losers for today. You've seen JK Lakshmi Cement also report results which have not enthused the markets. On the other side though, Honeywell Automation, Saman Capital, very, very interesting set of results to say the least. Amber Enterprises were one, and for Saman, of course, they've written off a lot in this particular quarter. Grasim as well as RHI Magnesita are some of the other gainers as well. But let's go across and start taking your stock related queries. Let me welcome in our guest, Nirav Asher, Head Equity Research Analyst at Latin Manharlal Securities, and Jatin Gedia, VP Technical Research at Teji Mandi. Gentlemen, both of you, thanks so much for joining in. Let me go across and take the first query. This one's coming in on Shriram Pistons. Of course, it's SPA Technology now, and he's bought shares at 3575. And saying that, he viewed the Q4 results, largely thought they were okay, but seen some correction post that. Nirav, if you have a view on how the results were and because it's not a cheap stock as of now, should our viewer Murli continue to hold this counter?
Well, I think he should continue to hold the counter from a medium to long-term perspective, because I think the prospects for the automotive component space is improving with the period of time, and we have seen auto sector making a comeback of sorts. So that will be reflected on the auto ancillary segment too going forward.
Got that view, but let's go across and take the next question now. And this one, it's on Samvardhana Motherson. Our viewer Shankar from Bangalore has bought 1,500 shares at 128. So he's in the gains. The stock has been in the green as well on the back of good results. Yesterday, we spoke to the management today as well. If you missed it, do catch it on YouTube, on our channel as well. A lot of conversation on the aerospace and defense side as well. He's planning to add 1,000 more shares here, Jatin. Would you recommend that at the current price point for Samvardhana?
I believe that the structure is positive for Samvardhana Motherson. We are expecting a move towards 145, 147 levels. pattern wise, it has broken out from a triangle pattern on the upside. So that is a trend continuation pattern. If he wants to buy 1000 shares, then I suggest to buy 500. And if there is a dip towards 134, then add more 500.
Got that view, but let's go across and take the first caller for today. This one's dialing in from Mysuru, and Mohan has a stock query for us. Mohan, very good afternoon to you. What's your query?
I just want to know, can I buy Swaraj engines or Kilo Swaraj engine at this time for a long-term horizon?
Got it. And do you have any other similar name in your portfolio, whether in the auto space or any others, Mohan, right now?
Auto space, automotives, and Bajaj Auto.
Bajaj Auto, got it. Nirav, Swaraj engines, it's been a very interesting counter as well. How are you viewing between that and Kirloskar for Mohan? Any of those that you like right now?
Well, it's an excellent company, Swaraj Engines. It's always rewarded shareholders very well. The fortunes of this company are linked to that of M&M because it supplies engines to Mahindra and Mahindra. And there's a very strong revenue visibility and a very small equity base, very strong return margins, whether it's return on equity, return on capital employed. And the company has been very generous in terms of its dividend payouts. So I think at this point of time, of course, we have seen that the tractor volumes have picked up significantly, and this is reflected already in the numbers of Swaraj engines. So the advice here would be to shift to some other counter where there is a possibility of gains. I'm not saying that it's a bad company, but already the run-up has happened. So I think he should look maybe towards Bajaj Auto.
Got it. Got that view, Nirav, and thanks so much for the detailed view. Let's go across, take another caller now from Vijayawada. And Bindu has a stock query for us. Bindu, very good afternoon to you. What's your query?
Good afternoon. I hold 100 shares of Transrail at 505.
Okay.
So my view is for short term. Should I hold to it or should I take exit and enter into another counter?
Got it. Jatin, on Transrail, because it's been a sideways kind of a momentum for this counter, what would you recommend for Bindu?
Transrail has been in a downtrend. I think if the view is for a short term, then the trader should hold on currently with a stop loss placed at 488. If there is a pullback towards 525, 530, I suggest to exit.
Got it. The next question, and it's a very interesting one on Sammaan Capital. We highlighted that during our market check as well, where a lot of that book has been written down in this quarter, hence the big 8,000 crore loss reported. Soumya from Bangalore is holding 100 shares at 142, Nirav. Firstly, Nirav, if you have a view, right, because the results, I don't think a lot of people were expecting this kind of write down in the first quarter itself with this magnitude. Any view that you have for Soumya, what should she do?
Well, typically this is what happens when you have a new investor who comes into the company, and I think in this particular case we do have a new investor, the Abu Dhabi-based investor who has made an entry into the company. And typically when such a scenario happens, there is a possibility of kitchen sinking which takes place in the subsequent quarters. Now, this kind of aggressive kitchen sinking, I think, has happened in the first quarter itself with a clear-cut motive to clean up the books and start on a fresh slate. So from that perspective, I think markets are taking it positive.
Got it. The next caller now from Pune, and Vinayak has a stock query for us. Vinayak, very good afternoon to you. What's your query?
Good afternoon. I have 2,400 shares of Bajaj Finance at 488 rupees. So I would like to ask whether I should hold it. I'm a long-term investor, whether I should continue to hold or rather I would be interested to partially book profit and then go into which stock for the next 2 to 3 years.
Well, firstly, Vinayak, many congratulations on those huge gains, 10 lakh rupees profit that you're sitting on. Did you buy this during the COVID downturn and have you held on for the last 5 to 6 years?
That.
Sorry, Vinayak, we couldn't get that.
In fact, more than that, even before the COVID, I had this.
Oh, well, firstly, Vinayak, many congratulations. I don't know why you want to sell, Vinayak. I think you're doing so well. But Nirav, what would you recommend for Vinayak on Bajaj Finance bought at 488? Is there a reason to complain?
No reason to complain, and I fully concur with you. I think he should not sell the shares, even partially. He should continue to hold with a medium to long-term horizon.
Hopefully, Vinayak, that does answer your questions. The next question now coming in. This one is a question between two. So, Abdul Rashad from Kerala has a question for you, Jatin. Wants to enter between Kalyan Jewellers as well as Skipper. Either of those counters that you like for the next 6 months?
Yeah, see, Kalyan Jewellers is firmly in a downtrend. So, from a short-term perspective, I would suggest to avoid that stock. As far as Skipper is concerned, Skipper is consolidating after a sharp run-up. So, I would suggest this trader to buy the stock only above 485, where we have the breakout level of the consolidation. So, above 485, he can consider to buy. On the upside, we are expecting 550 to 570 on the upside.
Got that view, Jatin. But the next one is coming in on e-clerks. And our viewer is holding shares and actually wants to enter this particular counter now, asking if it's a good time to do so. Nirav, would you recommend that, the IT pack going through its fair share of downtake momentum? Any view?
Well, I think he can consider some other companies or the emerging spaces. So I think we would be prompted to have a look at companies like Fractal Analytics or a NetWeb or an Oracle Financial Services. These are some of the companies who could emerge as tomorrow's winners.
Got that view, but let's go across and continue taking stock-related queries. Viewers, you can also call us as well for those said stock queries as well. Next one is coming in, and this one's from Rajiv Sahu on Cosmo First. We've not discussed this stock for a while on the show now. He wants to again enter this particular counter, and if it's a good time to do so, what would you recommend here, Nirav? Any coverage?
I think this is related to plastics and BOPET films. So I think it's advisable to stay away, considering the fact that the fortunes are linked to that of crude oil.
Got it. Well, that is definitely one of the key impacts that we are seeing across sectors, but most certainly on commodity linked as well. So that's Nirav's view. The next question coming in now, this one's on Acuitas Chemicals. Our viewer, Mr. Rao, wants to know if it's a good time to enter this counter. Jatin, would you recommend that?
Sorry, which name?
Acuitas Chemicals. ACUTAAS. Can you pull up this counter as well as Jatin looks at this one? Yeah, Jatin, go ahead.
Yeah, see, it's trading at a lifetime high. The risk here would be placed around 2,900 and thereafter ride the up. So it's firmly in an uptrend. So I suggest if he wants to buy at current levels, then place a stop loss at 2,900. And on the upside, we are expecting 3,150 to 3,200.
Got that view, Jatin. But let's go across, take another caller from Bengaluru. And Subramaniam has a stock query for us. Subramaniam, very good afternoon to you. What's the query?
Very good afternoon to all. I hold 49 shares of Suryoday Small Finance, IPO allotment at 305. Currently sitting at a loss of around 8K. I want to know what is the long-term view. Should I hold, aggregate, switch?
Got it. Let me go across to Nirav then. Nirav, one of those counters that have been a rank underperformer in terms of results as well, going through its fair share of challenges. Would you advise Subramaniam to just book out, and anything that you would recommend from that space?
Well, I think a lot of patience has been tested, and I think it would be better to exit the counter and maybe look at some good small or medium mid-cap private sector bank. Got
that view. But the next question now, and this one's on SBI Cards. Nirav, let me stick with you. He's bought shares at 620 and asking why does this counter continues to be in a downtake. Nirav, it's been since listing, it's not given any returns, right? Last 5-year returns have been negative, and the earnings are not catching up at any point of time. Would you just recommend him to exit since it's very close to his buying price and buy something else?
Well, I think the asset quality issues continue to persist, and I think the best course of action would be to exit the counter and again look at some good private sector bank.
Nihal, that answers your question. The next one also, it's coming in, and this one's on Bosch actually. A viewer holds 10 shares of the company at 36,530, and this is Kishore from Vijayawada. Today stock's down 5%. I think post the conference call commentary, Nirav, where growth expectation is flattish, but what would you recommend here? I think the management being extremely conservative at this point of time. The results were quite good. Should he continue to hold, wait for a quarter to see what actually happens?
These are portfolio stocks and they cannot be bought with an intent to trade. So I think he should continue to hold, not only from a single quarter, but from I think at least with a 1-year view, minimum.
Got that view, Nirav. But next question coming in from Prashant. And he has a question on TVS Motor. Jatin, what's a good price to enter? We saw a downtake because of, I think the momentum being impacted, probably because of the purchase of that Jana Small Finance Bank stake via the listed entity. Do you have a view, Jatin, on the charts? Is this a good entry price?
Yeah, see, I believe that on the weekly charts, post this sharp fall, it has witnessed an equally sharp pullback. So I think tomorrow the candle will be closed on the weekly chart. So by now it's forming a hammer pattern. So I think there is a lot of buying interest at the lower levels. So I suggest that 3,300 would be a very good level to enter into TVS Motors from a short to medium term perspective.
Got it. The next caller who's dialing in now is Shady. Shady, very good afternoon to you. What's your query?
Yeah, good afternoon, Puneet. Before I go to my query, I must say you have a great, collection of suits. I mean, I've been watching your suits. I mean, I see, Alex and all of your colleagues as well, but your collection seems more sharp. So,
well, Shady, firstly, I'll thank you for being so kind to me. I have been rotating between quite a few of them, so I think my rotation has been quite on point. But thanks so much for calling in and giving us your kind words. What's your query?
Yeah, so the query is it's on Tata Capital. I got one lot during the IPO. So 46 shares at 326. Fundamentally, I don't see any issue with the company, but the stock price is kind of going down. It's not crashing; it's just going down recently.
Right.
So I just want to understand what's the story. Is it the market sentiment or is it anything else that I'm missing on?
Got it. Well, Shidi, I think it was one of those counters, right, in terms of valuations that everything just seemed to be priced in at IPO. But I'll let Nirav also take a swing at this one. Nirav, I think it's the first time where I'm seeing it slipping below the 300 mark, and hence probably the question. But how did you view the results? I think the results largely were in line. Any view on the results? Any view on the counter?
Well, I think results were in line with the expectations, but I think the market circumstances at this point of time, we are seeing a lot of NBFCs come under pressure on account of the fact that the 10-year benchmark bond yield has been going up. So there's a lot of skepticism with respect to the margins and the asset quality related issues, etc. So I think valuations on overall have been under pressure, and this is no exception. So I think it will be a slow and a steady road to recovery, hopefully. So you should keep the patience and hold.
Got that view, Nirav. But Nirav, Jatin, as well as our viewers, it's now time for the rapid fire round in this edition of Profit. In this edition of Ask Profit, keep your answers as short as possible. The first question coming in on Sterlite Tech. Nirav, is it a good buy for the next 2 to 3 years, or is the valuations quite high right now?
Valuations are quite high.
Next one's on Cochin Shipyard, bought at 554 by a viewer. Jatin, should he continue to hold his 100 shares?
For Cochin Shipyard, right?
Yes, that's right, Jatin.
See, Cochin Shipyard, I think continue to hold with a 1450 stop loss.
Got it. Well, the next question coming in now, it's on Apollo Microsystems. Again, Suji wants to buy into this counter. Would you recommend that, Nirav, at this point of time?
No, it's run up quite a lot.
Anything that you would recommend, Nirav, in the defense space still?
Solar Industries.
Solar Industries, got it. Next one's on PNG. Is it a good time to invest at 9,800? Again, I think a portfolio stock, Nirav, in that sense, MNC culture. Any view on the stock though?
I would prefer a Nestle.
A Nestle, got it. The next question, that's coming in, it's on BEL, bought at 456 by Lalita. Should he continue to hold here on the charts? What would you recommend, Jatin?
Yeah, continue to hold with a stop loss at 402.
Magnelic Cloud or Texmaco Rail, which is a better stock to invest at the current price? Nirav, any view?
Texmaco Rail.
Got it. The next one coming in now on Bank of Maharashtra. Is it a good time to look at this counter now, Nirav? Would you recommend that?
Definitely yes, because the numbers have been quite good and there has been good institutional buying happening only.
Canara Bank is the other one. Our viewer wants to buy 500 shares and this is E. Venkatraman, who's a regular viewer. Nirav, should he buy that for the next 1 to 1.5 years?
Yes, with a long-term perspective, yes.
Sangvi Movers, also another one, Nirav, where the results were quite strong. Our viewer wants to make a fresh entry for the long term.
Yes.
Next one's from Roop Mukherjee from Kolkata on Bajaj Healthcare, bought at 290. What's the view, Jatin, on the stock? Should he continue to hold?
The stock is in a downtrend. I suggest exit.
Also on Wheels India, Jatin, because this one has a joint venture with Bosch, and I think that's why the stock's up today. But a short-term view is what Kunal is asking.
Yeah, today breakout. Continue to hold with a trailing stop loss at 1560. Target would be 1800.
PCBL Chemicals bought at 160. What's a good time, Jatin, to exit this counter is what Priyanka is asking.
Current levels, she can exit.
Next one's coming in on Eternal. Our viewer Sonu has bought shares at 270. Nirav, are you in the camp of continuing this bet for the long term?
Yes.
Next one's from Rimple from Chandigarh, holding 500 shares of Chambal Fertilizers at 480. Wants a 1-year horizon, Nirav?
I think it would be better to shift to something like a Deepak Fertilizer.
Got it. Radhakrishnan from Kochi wants to know a view on First Source Solutions. Can it be accumulated? What would you recommend here, Nirav?
No, avoid.
No, got it. Well, that is the end of the rapid fire in this edition of Ask Profit. Nirav as well as Jatin, thanks so much for giving us your views across a whole bunch of stocks and spaces. Appreciate your inputs. But viewers, out of time on this edition of the show. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit, for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move,
hello and welcome. You're watching India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Mahima Vachajani. Mahima, interesting day of trade. We've given up gains and that's the disappointing part that I'm seeing in terms of markets. Pretty much flat right now, 23,672, below that 23,700 mark is what you're seeing right now. In fact, you have Bank Nifty as well, which has actually got into the negative terrain, already seeing cuts of around 0.3%. The advanced decline ratio, if you go to see, is in favor of the bulls still. But if you see the intraday chart of the AND side of it, let's just pull up that one on the screens and that will tell you the story there. The way it's actually trying to converge now, it's narrowed here, your declines have increased and you have advances which have gone down. So that's with regards to where the advanced decline market ratio goes. Before we go ahead, a couple of updates coming in from Iran, where Iran is saying that the US message has reduced gaps to an extent. That's what we've been tracking right now. They're closing gaps and they need US to abandon the war temptation. Apart from that, what they're indicating is that the US message has reduced gaps to an extent. I mean, that's the only line that I read right now.
Yeah.
And no major reaction coming in terms of markets on the back of this as well. But we'll need further updates on the same as well.
It should possibly some positive that we could see, but I think just on the advanced decline ratio, right? We were almost 3:1 ratio. Now we are almost around that 2:1 ratio.
Almost 50,
less than
exactly.
2:1 ratio, in fact. And we've broken the important resistance that we've been tracking, right? 23,700 levels is what we've been tracking continuously, and that we've broken. So I think that's the area of concern right now, because once that resistance is broken, we'll have to see as to where this takes support from here on. So that's of course.
Let's just look at the intraday chart of Bank Nifty as well, because that'll give you some bit of cues, and then we'll move on to the heat map there.
Point.
There you go. The kind of profit booking that's come in there, some bit of respite again, but we're still in that negative zone with cuts of 0.3%. Let's look at the heat map of Nifty 50. Overall, yes, more greens versus the reds, but still, names like ONGC under pressure, and that's because crude has been coming off and that becomes negative for an ONGC. Apart from that, Tata Consumer, HUL, two names that I'm citing in the top 10 which are from the consumption pack. You have financial companies which are under pressure. So you have a Bajaj Finance, Shriram Finance, Bajaj Finserv and a Kotak Mahindra Bank which are trading down and about. Bharti Airtel is another one. Tech Mahindra, Infosys also from the IT pack. What's actually hogging the limelight today, Mahima, is Grasim. Absolutely on the way earnings have panned out, what brokerages are decoding out of it as well. Indigo also on the back of crude coming off is taking some positive cues. Apollo Hospital reacting to numbers. You have Trent, BEL, HDFC Life, Wipro, Adani Ports again on the stake purchase is in focus. Hindalco continues the upward terrain. So a very mixed picture is what you're seeing in terms of individual stocks as well. Let's look at the sectoral heat map to understand more with the broader markets, Mahima.
Yeah, so for sector, defense continues to lead the rally. It's up 1.5%. Realty today, after a couple of days, is seeing some action now in terms of where buying goes, so up almost 1%. Consumer durables is where we're seeing some action up by about 0.5%, but largely pharma, PSU banks, auto is where there is some positivity. Nifty clearly second in a row is seeing now profit booking. FMCG also down by about 0.6%. Private banks is where the major weighing down is coming in when it comes to the Nifty bank, plus the financial services end as well. Quickly, if we can see the mid cap 150 and the small cap 250 as well, because we've come up from the day's high point, but the Nifty mid cap 150 is almost flat, but there's some relief at least where small cap 250 goes. Again, off from the day's high point slightly, but still hovering at least higher by about 0.65%.
And that's, I think, what is keeping the breath also afloat in favor of the advances to some extent. So it's either the large caps or the small caps which are giving out some bit of buffer. Let's just quickly look at the components in terms of NSE 500 or BSE 500. Honeywell, again, Samman Capital, Metro Brands, all of them reacting to numbers. Likewise here, PI continues, the Industries continues with that downward pressure. Jubilant Food, JK Lakshmi, Bosch, Imami,
all earnings.
All of them reacting
all
to numbers. So it's a very
yeah.
event-specific reaction that you're seeing in terms of trade today. But let's quickly take the viewers through as to what we could expect in the next 1 hour, as well as what's happened tomorrow. Now, sell on rise strategy is what we're seeing in terms of Nifty 50, exactly what's the way it's panning out. And we witnessed a sharp fall after opening. We've actually, it's opening 200. We opened 200 points higher, and from there is where we've seen that downtick coming in. In terms of resistance, 23,900. Now you're seeing 23,600 as the key support level as well. Now, if 23,600 is broken, that will be a concern. Nifty is remaining below all your key EMAs, and the momentum indicators that we've been tracking are still absolutely negative. 23,800, that is the line in sand that we need to look at, and it's reclaiming that to trigger a short covering rally towards 23,900 to 24,000. Now, the private banks, they are the ones which have continued to drag Nifty Bank and Nifty 50 as well, and that has been the phenomena over the last 2 to 3 trading sessions, where it's the private banking space, the heavyweights there, which are actually putting pressure. Value buying seen in small cap names, and that you saw 0.6% higher there. So that's where all the action is right now. And this is very interesting. Your IT has continued to see profit booking today. The expectation was that after Nvidia earnings, after the commentary that we heard from Nvidia, because of that positivity, you will take Indian IT taking cues from there, but does not seem to be the scenario because of that 2 to 3 day run up that has come in terms of Indian IT. That has not sustained. Real estate index is interesting. 3 consecutive sessions of gains that have come in here. So there is some bit of respite coming in on this front. Bank Nifty continues to outperform. 8 out of the last 10 sessions where Bank Nifty has actually fallen in trade, and 53,200 is acting as a support level. 54,000 is a strong resistance. Buying on dips, that is what you're seeing in terms of Bank Nifty as well, and this is as long as it holds above that 53,000 mark. If a breakdown is happening below 53,000, the target then shifts to 52,500. So these are the levels that we are tracking so far, but let's get in our guests for the day as well. We have Jay Bala joining in. Jay, good afternoon and welcome to the show. This is Hiral on this side. My question to you is, this tug-of war in terms of markets has continued. The anticipation was that the setup in terms of Bank Nifty is seeming much weaker as compared to Nifty 50. And a sell-on-rise kind of a strategy is what we're seeing with the kind of index levels we track right now. How are you looking at it? What are you tracking and what are you expecting over the next couple of days?
Hi, Hiral. Good to be here. And see, the markets are doing what it's expected of it to do. The April to May rise to about 24,600. That is the first step of the bullish move. The pullback here has been choppy, and despite negative news, the markets aren't pushing below the May low. And it's not very clear in the extreme short term if the May low has completed the final push lower. I was expecting the pullback to be somewhere in the region of 23,300 to 23,100. That clarity will come through if Nifty 50 were to cross 24,480. Once the 24,480 is done, the bottom is in. The next leg up will be a very powerful move, and it's going to surprise a lot of people on the upside. So watch 24,480 as an important resistance. Once that's clear, we are looking at the markets quite bullishly. And yes, the banking sector is slightly lagging behind the Nifty, but I'm sure things are going to turn around there too. So 24,480, once that's turned around, the private sector banks are going to be participating and leading the rally. Last time, up to the March highs, it was the public sector banks that was leading the way up. So watch for private sector banks to pick up.
Jay, hi, good afternoon to you. Considering that every day we are seeing the second half of the market to completely turn as to what was happening in the morning, right? How does one trade right now? What are the stocks that you still think have a lot of action left and there's more steam left? What are the picks for the day that you would give to our viewers?
Yeah, as a slightly higher time frame, I will look at capital goods stocks, and Hiral just spoke about real estate sector. The fact that it's bouncing for 3 days, it's just shaping up as a very important price structure. I had called out that the April low of Nifty Realty was a very important low. It's shaping up to rally to all the way to the September 2024 highs, the all-time highs. So watch out for the realty sector to break out in the next few sessions. And capital goods is something that I'm very bullish from a higher time frame. So in the near term, you can look at stocks within the space, or you can short term is quite widespread. When it comes to bullish candidates, I have Tanla Platforms with a stop loss of 481, possibly reaching past 695 to 700. I'm also bullish on PCBL, Philips Carbon Black, with a stop loss of 262. So both these two stocks also have bullish potential in the medium term, but in the short term also starting to look bullish here.
Okay, all right. So those are the picks. But Jaybala, what about something like a Jubilant FoodWorks? Because, if we take a look at the Q4 numbers, I think peers have done well this time. Westlife, something like a United World did very well. Still today also trading much higher, around 15% odd. Compared to that, Jubilant FoodWorks has not been able to do well in Q4 on a higher base, plus the like-for-like growth was almost flat. Commentary also not looking very bullish. They're cautious when it comes to the first half of FY27, and that's why we're seeing the pressure being continued on that counter as well. But where technicals are concerned, do you think that this is where it finds its support and there could be some up move from here on? What are you expecting?
Yeah, one sector I've been avoiding consciously has been FMCG. I've been avoiding FMCG sector since 2024, 2025. But I still anticipate that sector to be an avoid. And the recent rally that you've seen in the FMCG space could take the FMCG index to about 58,000. So any rally here within the FMCG space is likely to be a counter trend move within the longer term downtrend. So keep that as a trading bet. I don't find the whole sector as attractive. There are outliers like Nestle and Dabur, but as the frontline names, ITC, Britannia, Asian Paints, most of them aren't looking good. So as a sector, it's an avoid and choose your picks here carefully and treat them as trading rally rather than a turnaround candidates for investment.
Okay, all right. And what about something like a PI Industries? Because this is second day where it's seeing constant pressure coming in. Do you now think it's found its bottom?
Yeah, PI Industries is a very interesting stock. It's still got some more downsides to work with, and I wouldn't venture into getting long or bullish around here. It's probably got to do some more downsides. Somewhere closer to about 2,500, 2,400 mark. Once it gets there, it gets a very strong support. So right now the short term is not good, but there's medium term potential once it starts trading near 2,400, 2,500.
Okay, so that's PI Industries. The pressure does continue at the day's lowest levels. But this is an important story. Sources are indicating that RBI is evaluating a multi-pronged measure to arrest the rupee slide. Piyush is here with us to tell us more. Piyush, what are you picking up from your sources? Because we are already talking about an intervention that is expected to happen on the 26th of May. But apart from that, any other measures that you're picking up from your sources?
Absolutely. We are hearing from our sources that RBI is holding internal meetings with all the stakeholders, with their staff, the Forex department, and essentially the focus is on how to curb the depreciation in Indian rupee. We have seen yesterday the rupee hit around 97 level versus US dollar. Today the rupee recovered by around 80 paise to around 96.20 level. However, this continued depreciation in rupee is something which is concerning the regulator right now. So there are multiple options that are on the table. The RBI, as we are aware, just yesterday announced that they will be doing a $5 billion buy-sell swap. And we are expecting, the sources indicate that there could be more such dollar buy-sell swap going ahead, dollar and INR. Further, the very anticipated talks on FCNR deposits That also is on the table, although nothing has been finalized yet, but this is something that RBI could launch to arrest the fall, though there will be some charge that will be incurred, but the gains are pretty high. The inflows are expected at around 30-40 billion, more than $40 billion if this deposit scheme is launched. Furthermore, the government-backed sovereign dollar bonds also is being talked about. RBI is further, also likely to nudge PSU banks to raise their borrowings in dollar form. We are aware just 2 weeks back SBI announced that it will raise around $2 billion via foreign currency. So all these measures are being deliberated upon. There is no final say yet, but the RBI overall is working on a strategy to curb the fall in Indian rupee. Back to you.
Right. Thank you, Piyush, for that. These potential introduction of aggressive capital infusion measures will actually have a profound, probably a short-term stabilizing impact as well when you talk about the Indian rupee. However, it will actually trigger, say, a very reallocation kind of an effect between Indian equity, bonds, as well as if you have to talk about the banking system as a whole. And when you're targeting a structural dollar inflow, rather than just spending your foreign exchange reserves, the RBI is actually signaling a transition from, say, a defensive spot market intervention to aggressive capital mobilization. That is what this means when, when Piyush is getting us all the details. It is going to be interesting to see the kind of impact it could have. Let's just pull up the INR right now and see what's happening in terms of the Indian rupee as we speak, because there was some bit of appreciation that did come in terms of today's session versus the kind of downtick that we saw yesterday. If you can just pull up the, there you go, you are still looking at levels of around 96.38. In terms of trade today. So this is going to be an interesting move by the RBI if it happens. This is a source-based story that Piyush has bought for us. But let's see how everything pans out, because FCNR is something that the street is asking for as well as one of the best measures that could be adopted when it comes to arresting the depreciation that we're seeing right now. But moving on, Grasim, I don't know whether to call it the stock of the day, whether that stock should be in spotlight. Interesting moves at the day's highest levels, strong Q4 performance, and there are lots of segments that were eyed pretty closely, especially when you talk about the paints division, that's Birla Opus. Let me head across to my, colleague who's Mahima, was sitting here and is now picking that up for us to tell us more. Mahima, you've been tracking this sector pretty closely. Was this something, first, which was expected from a Grasim, and two, what is it that has actually kicked the markets off to this extent on the positive side?
Right, so Hiral, I think the expectation from the paint business was yes to see an outperformance, but I think them saying, coming out and saying that market share gains have happened was something that was not expected. That was the one thing that the street got enthused with. And I think the second factor was the chemical business, which has been a business which has always had an overhang on the Grasim business, has now seen a revival. In fact, if you take a look at the CSF division, that has seen a strong rebound, and the VSF margins have also expanded. Overall, margin-led growth in the chemical segment is something that has also turned out to be very positive this quarter. Plus, paints largely led by execution, and they've said that they aim to become the second largest player when it comes to the paint business. And they're nearing, it's interesting because they're nearing almost Berger Paints revenue. So that's something we'll be watching out for as to how they scale up from here on and how quickly they scale up from here on. The next one, with regards to the market share that they've talked about, they've almost seen a 90 basis points quarter-on-quarter market share again. That's a very important data that the management has given, and that's something that probably the street has liked very much, and that's why we're seeing an uptick of almost 6% in a Nifty 50 stock, right? Now, in terms of key management commentary for, as to how things look like going forward, they've said that they've kind of reiterated the goal of building a 10,000 crore profitable revenue franchisee by FY28. Variable costs are expected to decline through improved procurement efficiencies, and this could improve margins as well going forward. And the company still remains in the investment phase and will continue reinvesting surplus cash flows, is what they've mentioned very specifically. In terms of what to expect going forward, EBITDA, of course, could see some pressure considering how raw material inflation is going to take place, plus volatility because of the Iran war. Grasim plans to invest around 2,880 odd crores through preferential issue in the Aditya Birla Capital as well. So that's also something that we'll be watching out for. Now, brokerages largely have hiked the target price this time for Grasim. Jefferies has gone ahead and hiked the target price to 3,600. They're saying the improving standalone business has driven the strong Q4 beat, and that has driven the FY26 business overall. B2B e-com is expected to turn profitable by FY27 exit. Citi has also hiked the target price to 3,600. They're saying that the stock will be driven by cement and paints, supported by VSF and chemicals. Whole company discount should keep narrowing as paint volumes profitability rise, and also on an elevated dividend from Ultratech. So this is the overall view of what's worked this quarter and what lies ahead of Grasim. So this is the reason as to why we've seen such an uptick in the counter, Hiral.
Thank you so much, Mahima, for that. In fact, let me take this quick question with our guests as well. Overall, if you have to look at the entire paint segment, you had, Asian Paints, which was ruling under pressure with the kind of market share that they lost. But apart from that, you also saw valuations become as cheap for Asian Paints, and that's what actually worked for them. Jay, let me come to you. If you have to look at a Berger, Asian Paints, Grasim, where are you seeing more constructive charts right now?
For Grasim, of course, Grasim's got an excellent breakout on its longer-term time frame, basically the weekly time frame. I wouldn't be surprised if it rallies something to like 4,500 or even higher. So it's got a very interesting breakout, and it's confirming the medium-term picture for me. I'd be a little bit cautious on Asian Paints and Berger, although I'm expecting crude prices to crash. So I don't know if that's going to bring the benefits to Asian Paints and Berger Paints. But the starts there looks less bullish. And as I said earlier, I'm being a little bit neutral to cautious on the FMCG space. I would treat them as trading rallies rather than investment bets. But whereas Grasim looks like a very interesting chart.
Okay, all right. Of course, so that's the technical view, but we have Dhananjay also who's joined us now. Dhananjay, your view on this entire space, because one side we're seeing, as to how crude prices could overall see an impact in the first half as well, although they've taken price hikes, so volumes might be protected. But amongst the paint players, right, any particular one that you're liking? And as to, your commentary on how Birla Opus has scaled so quickly and now almost is ready to take over as being the second largest player in the paint space.
So I think for the broader paint segment, I think the increase in raw material cost is a very important variable to look at this juncture. Companies have been able to are increasing prices in the anticipation of higher raw material cost. I think that is already happening. We think that cumulatively price hikes could be of the order of 15% or there are 14-15%. And I think what companies have done is roughly about 2-3% in April. Also, there has been some hikes that have been there. So I think there is definitely a raw material cost pressure that is imminent in the near term. So that is there, and I think the space has been fairly competitive with Birla Opus being there. There has been rejuggling in the overall market share. Asian Paint also was under a drag earlier on. So I think that's the broader context of the paint market. So near term, it does look to be somewhat on the weakish side. With respect to Grasim, I think it has been a phenomenal journey in terms of the increase in the market share. They have gained about 370 basis points year on year, and that's largely because of the distribution aggression that they have done, the products that they have actually introduced, etc. And I think the promotion activity has been there. So it seemed to have done well.
So Grasim setup, Dhananjay, seeming to be much better technically and fundamentally right now as well. Thank you for that. In fact, stay with us. Now, the government is aiming to maintain surplus supply, and this is amidst that rising power demand that we are seeing. They are in action mode to meet the surplus requirements. My colleague Sesha Sen is here to share with us the government's plan of action. Sesha, what are you picking up from your sources? Good afternoon.
Right. So, senior officials from the Ministry of Power presented the government's action plan to tackle the surging demand for electricity during the summer season before the Parliamentary Standing Committee on Energy. Now, officials told the committee that the electricity demand rose from 256 gigawatt in April to 265 gigawatt in May, and it could even touch 271 and 283 gigawatt in June and July, respectively. Now, under the emergency plan, the Ministry of Power has decided that all power plants across the country will remain operational during June and July. No power plants will be permitted to undergo maintenance during the period. Now, this is expected to yield a surplus power supply of approximately 15,000 megawatt. The committee was also informed that power companies in the country currently hold a coal stock reserve sufficient for 18 days. Now, following disruptions, to natural gas supplies, some power companies have placed order for natural gas also from Nigeria. Now, it has also been decided that hydroelectric power plants will not be operated during the day. Instead, they will be kept operational exclusively during the night. So all this, is expected to help in tackling the surging demand for electricity this current season.
Thank you so much, Resha, for that. We need to understand how is this going to really impact, Indian companies as well. Rupesh Sankhe, Senior Vice President Research at Elara Capital, joins in. Rupesh, good afternoon and welcome to the show. This is Hiral on this side. I'm sure you've heard the story what Sesha has got for us in terms of government's emergency plan, and this is to tackle the surging electricity demand. Now, yes, the plan is in place. What do you make of this?
Yeah, good afternoon. Certainly, if you look at the installed capacity available is 550 gigawatt, and effective capacity available at any point of time is close to 300 gigawatt. So we are 275, 280 gigawatt kind of demand we can handle with a better resource management like supply side management as well as demand side management. So supply side management, definitely some of the gas-based power plants which are running at very, very low PLF could see some sort of in operation, as well as imported coal power plants which are already under Section 11 can be come for the production, and some sort of demand side management like time of the day kind of mechanism might be there. But 275 gigawatt kind of capacity we can easily handle, because in the last 2 years we have seen close to 90 gigawatt capacity addition has already happened, and that can take care of incremental 25 gigawatt kind of a capacity. So 2 years back the capacity to 55 gigawatts, so 275, 280 we can easily manage. But certainly the companies like Torrent Power or Tata Power or where the company's plant got impacted because of low demand in the last 2 years might see some benefit because of this increase in peak demand, as well as we might see some better exchange volume on the IEX front. So overall positive for the companies who are dependent more on the merchant like Adani Green, NTPC, Zeta Power, Torrent Power, IEX, they certainly will get benefit because of this high incremental peak demand, as well as the Coal India might see some better e-auction realization because of this higher peak demand.
Okay, Rupesh, the other aspect is with regards to the renewable angle of this. Where do you think will solar and wind contribute? Because that is the one advantage that we can take. So how do you read that situation?
Definitely, I think few sites like in Rajasthan still solar curtailment is there because transmission line is not got connected. So that will take another 3 to 6 months. But we'll see a lot, rapidly deployment of battery storage or solar plus battery kind of tendering happening in the near term. So a lot of push is there to bring battery storage in place so that we can store this excess generation during the high radiation daytime, and we can utilize during on the peak evening demand. So that is there on the card. So a lot of activities will happen. The transmission issues which are there, we'll see a lot of clarity there also. I think the entire ecosystem is gearing to handle this kind of peak demand in the coming years. So I think this is good for the renewable energy which are stuck and may see some light in terms of PPA signing from the DISCOM side.
Thank you, Rupesh, for that. Interesting angle here with the kind of benefits that could be flowing into power companies as well right now. IEX is another one, Coal India is another one that could be a beneficiary of this emergency move that the government is looking at. We'll come back to our guests shortly, but let me go across to my colleague Somit Sarkar, who's standing by to tell us what is he picking up from all the chatter in the dealing room. Somit, lots of stories that are breaking in terms of what the RBI is expected to do when you come to talk about the Indian rupee. Now you're talking about a power sector story break that Sesha has got for us. What are leaders telling you?
Well, a host of stocks that dealers have also highlighted. Firstly, it's Panama Petrochem. Now, dealers are indicating that a large prominent HNI has been accumulating this counter in trade, and they're also expecting a strong set of Q4 numbers coming in from Panama Petrochem. So keep an eye out for this counter. For JSW Energy, the company did announce yesterday that they have initiated their QIP. What dealers are indicating is that the demand has been very strong for this QIP, and large long-only funds are subscribing to this fundraise. For Ashok Leyland, there are buy flows on the large HNI and PMS desk. Dealers are expecting strong margin beat in the fourth quarter of FY26. For Dalmia Bharat, yesterday the company did announce that they will look to consider fundraise in their next board meet. Now, what dealers are indicating is that this would just be an enabling resolution, and there won't be any concrete decision on this fundraise. Even last year, the company had taken shareholders' approval for such a fundraise, but nothing had come out post that. So, not any fundraise decision would come in from Dalmia Bharat side. And lastly, for Varun Beverages, there are buy flows on the institutional desk. Both DI and FIs have been accumulating this counter, and delivery volumes are expected to be on the higher side.
Okay, all right. So, thank you so much for getting us those details. I think Varun Beverages is the one stock that sticks with me. But Jaybala, your view on the charts for this one? What are the support and resistance that you're seeing for Varun Beverages?
Yeah, see, Varun Beverages is starting to look good. If it does take out 540, 535, 535, 540, it probably has a signaling. It's just not just a short-term up move. If it were to cross 540, it will be slightly a medium-term, longer-term turnaround. But post 540, there's one pullback that's due after that. But that might be a bullish opportunity for the stock. So the stock has got support at about 480. And short-term resistance at 535. But cross of 535 would be a very important signal for the stock.
Okay, so that's Varun Beverages. Dhananjay, let me come to you on the banking front. You know, from a technical perspective, everyone's of the opinion that the setup is looking very weak when you talk about banks, Bank Nifty as a whole. And especially it's the private banking space which has been on the back burner versus the PSUs. From the way valuations are panning out, the way Q4 numbers have panned out, getting into FY27 as a year, would you be a buyer? And if so, what would your top picks be?
So I think if you look at the fourth quarter, there were expectations that there will be a revival in earnings for the banking space, given the context that credit growth had actually picked up to almost like 15+% from about 11% odd. So the expectation was that this would translate into better earnings, NII growth, etc., and NIM spread as well. Whereas what you've seen is that it has been a fairly mixed performance. And I think the larger banks have actually seen fairly weak operating performance in terms of the NIMs growth and the NIMs margins as well. So I think there are reasons why various banks are telling why it has been weak. But I think from a forward-looking standpoint, we do expect that the liquidity scenario could tighten. The G-Sec yields have actually gone beyond 7, 10 or thereabout. So we are expecting that as inflation moves up, there can be rate hikes later this year. So the cost of fund for banks might actually increase going forward. At this juncture, it doesn't look like banks have the pricing power on the lending side. There hasn't been any major qualitative improvement as far as the lending growth is concerned. So my sense is that for the next 1 year, assuming that inflation goes up to 6-7% from a headline CPI standpoint, we do think that the banking sector might actually underperform. So that is where it is. I think the PSU banks have actually taken a major hit, SBI in particular. And I would say that it will be better to be with banks who can actually manage their ALMs, asset management liabilities better. So I think some of the large private banks can available at cheap valuation can do relatively
Got it.
better.
Okay,
Yeah.
so that's the view with regards to where the Nifty bank goes and bank constituents. But now also let's take a look at what's happening with regards to where bond yields go. We have Sharad joining by, who's trying to break down what high bond yields mean for your portfolio and where the tilt should be. Sharad?
Well, yes, the name is bond yield. Interesting. A high bond yield, I'm sure you must be getting worried about it. What happens to my portfolio? Well, I'm here to decode it and you can relax. Well, let's start with it, why this high yield scenario comes in and which assets should be there in focus, especially in equity, banks, insurance, energy, and most importantly, dividend paying stocks. This is where the alpha is made during these times. Also, other asset classes are there, and if you are having mutual funds, there is target maturity funds, dynamic bond funds, and corporate bond funds as well. And also REITs also make it to my list. InvITs are also there. So they do offer some safety here. But let's move on and keep a focus on dividend paying stocks, because we are focusing on the equities. Stable income for the investors, defensives are at play. And largely, if you look at it, the utilities, FMCGs, PSUs, and select metals are the plays if you are investing in the dividend paying theme. Also, there are infra trust, REIT, InvITs, and I checked the last 12 months, 9 to 19% of dividend yield is coming in. So that itself is very much rewarding. But which are the stocks? Of course, there is growth angle, but there's a dividend yield angle. And look at this. Largely, we have OMCs, interesting name, Unipaths, makes it to the list, Barmel Lorry, Questcorp, all of them in the last 12 months have given 7+% dividend yield. This also includes JSW Dulux. We have two logistics companies also in the list, Gujarat Pipavav and Gateway District Parks, followed by Coal India and Honda India Power. All of them are giving 5% plus dividend yield. But let's get a little bit deeper into it. OMCs, there is a volatility at play, especially on the pricing and the refining margins. Also, if you look at it, the next stock is Unipaths India. The construction equipment business demand is strong, especially in the second half of calendar year 26, to keep that in your watch in your portfolio. Barmel Lorry is largely, you could say, a holding company, and their travel segment has been doing well off recently. Also looking at the other stock is Questcorp. Post-demerger, better valuations have come in despite the wage code impact. And looking at the other company is JSW Paints. Recently it was acquired, and now more distribution networks will be added. Gujarat Pipavav, a future dividend yield might be under a pressure because of capex pressure. And looking at Gateway District Parks over here, there is a beneficiary of the dedicated freight corridor. That's what the analysts are bullish on. And also looking at the other few stocks, Coal India, pricing and realizations are expected to remain stronger going ahead. And the last stock, Honda India Power, that's where the demand and costing might be impacted because of geopolitical tensions. So I've given you the entire list of the dividend paying stocks where the dividend yield is strong.
Thank you so much for that. This is an interesting play, that you've given out to all our viewers as well. Thank you, Sharad, for that. Dhananjay, let me come to you. A quick question. A dividend yield play, in terms of the way bond yields are panning out, do you think that's the right way to look at it right now?
So I think as far as the dividend yield is concerned, it has to be companies that benefit from higher commodity prices. Coal India, I think somebody mentioned that's an excellent dividend yield play, because you'll have higher energy costs, higher coal prices that translate into better profit, and also it is also a PSU company which actually offers a fairly high dividend yield. So I think that one can look at some of the commodity plays who are stocks that can give better dividend yield. So I think going forward, past history is a track record to really look at. But I think going forward, since the earnings are going to be volatile in a context where the cost of raw material will decrease, we have to be fairly selective and look at sensitivity of rising costs with respect to top line. So I think material space is relatively better for dividend yield.
Okay, all right. So that's of course one perspective, but of course keep in mind that most stocks that have high dividend yields do not give capital appreciation as much, right? So always keep that in mind. But with that, Dhananjay as well as Jaya, thank you so much for taking out the time and of course giving us all your views on the stocks that we discussed on the show. And viewers, it's time to slip into a very short break, but don't go anywhere. We'll bring you top buy today, sell tomorrow calls on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back to India Market Close on NDTV Profit. Now, clearly, if we can just pull up Nifty 50 once again on the screens along with Bank Nifty to take a quick check before we're just like, 20 minutes away from closure. But, we're very much stagnant from where we started off in terms of the show today. Flattish moves below the 700 mark is what you're seeing already. Bank Nifty as well. 53,500 is what you're tracking. A mild recovery from the day's lowest levels that has come in, but still in the negative. To talk to us further, Vineet Bulinchkar from Ventura Securities and Rajesh Palvia from Axis Securities joins, and welcome to the show, gentlemen. Always a pleasure to speak to you as well. Rajesh, let me come to you. With the way markets have been panning out, we've been talking about this push and pull. You are seeing, selling at higher levels and probably a buy on dips kind of a strategy that has continued over the last couple of days. If you have to look at Nifty and Bank Nifty, where are you seeing strength?
Yeah, good afternoon, Hiral. So buy on dips and sell on rise, both strategies are working in this kind of market since last 5-6 days. We are seeing that, whatever, gains Nifty is trying to maintain during the day is, again, meeting to the supply pressure. 23,800 zone is acting as a steep resistance for any kind of up move which we are experiencing in last couple of days for the Nifty. On the downside, 23,300 is the acting as a major support area. But again, in this volatility, broader market is showing different behavior, and we are witnessing a lot of stock specific, sector specific action in this market. And looking at the overall scenario for the market, we believe that Nifty is poised to give breakout of this supply zone, which is there based on the call concentration of 23,800. And I think once that breakout takes place, we could see a very sharp up move in the market, as it's almost 5 to 6 days in a range itself, and the broader market is showing sign of confidence. So we are waiting for that breakout to add more position. At this juncture, 23,500 is the stop loss on the Nifty spot to hold the long position. Any minor dip should be used as a buying opportunity. But yes, Bank Nifty is still struggling to cross major supply zone, which is placed at around 53,800, 54,000, which is very important and crucial for Bank Nifty to cross. Once Bank Nifty crosses those level, I think then here also in Nifty also we could get more comfort and support for moving further higher. So till Bank Nifty is not crossing this level, I think we may see the range bound activity. But looking at the broader market, we are optimistic, and we feel that there is a possibility of higher side breakout.
Okay, so that's with regards to Nifty and Bank Nifty. Rajesh, any top picks today?
So two stock ideas where we are focusing. First one is from pharma space. Glenmark Pharma is looking attractive. The way stock is holding about to all its near-term, short-term moving averages. We believe that stock has potential to surpass its previous all-time high trajectory also. So one can buy and accumulate Glenmark Pharma for upside target of 2450 to 2470. On the downside, one needs to keep a stop loss towards 2330. The second stock where we are focusing at this juncture is GMR Airport. Stock took support from its 50-day moving average and now negotiating to its 20-day moving average supply zone. I think looking at the buying interest, we believe that this stock can extend gain. 104, 105 we are projecting target. On the downside, 93 needs to keep as a stop loss.
Okay, so that's with regards to top picks coming in there. In fact, GMR Airports is at the day's highest levels, gains of 3% coming in there. Vineet, let me come to you. Interesting names that are moving in trade today. I mean, Grasim has been one of them. We've been talking about it as well. But from the new age companies, Lenskart is one counter where it's a pretty mixed view coming in there. Not here, not there. Stock seeing gains of nearly 3%. Any views on this one?
So, Lenskart has captured the imagination of the markets. And I believe that, if you go into the hinterland, there the market share gains are coming in very handsomely for the company. And given these facts, I think that the revenue growth spike that we have seen will sustain going ahead. And soon will also have net profit level. Continue to remain positive, and there's a huge TAM unfolding, because they're able to, build leadership. I think they should do well going ahead.
So that's with regards to where Lenskart goes. In fact, Mahima is already waiting to tell us whether the bull case is better or the bear case is better. Bull and bear case scenario coming in for Lenskart. Mahima, over to you.
Right. So, Hiran, I think Q4, we'll give that credit to them. That has been a stellar quarter in terms of how, the growth and margin expansion has been, because Q4 saw almost a 41% growth in terms of the top line. FY26 as a whole has also seen a growth of 32%. But at the same time, we've always talked about this. We talked about this during the IPO as well, that valuations were never cheap and are not going to get cheap, because FY27 estimates are suggesting a PE of 104 times and FY28 at that almost 75 times. So it's not going to get cheaper in the next 2 years as well. But with regards to how the expansion goes, massive margin expansion shows kind of the operating leverage has kicked in. FY26 EBITDA has nearly doubled, with margins expanding almost 370 basis points. But at the same time, execution is a risk, considering how they are going very aggressive when it comes to the store expansion, especially in the tier 2, tier 3 cities. Now, when it comes to the store expansion, of course, it is an opportunity. Definitely, execution is a key, but it is definitely an opportunity because Tier 2 is very underpenetrated when it comes to the organized space when it comes to eyewear, right? But at the same time, aggressive expansion could kind of put pressure on cash flows in the near term and going forward as well, right? Because overall, if you take a look at how capex has doubled in the past couple of years, cash flows have been under pressure and could be under pressure considering the expansion as well. In terms of where international business goes, it's been a star performer for them. Business is becoming a real profit engine for them. Overall, international EBITDA margins also improved sharply, and Japan and Saudi Arabia are performing ahead of what the street was expecting. But at the same time, I think that currency depreciation is a key risk when it comes to the international business, considering that we are seeing INR depreciating. That's something that we need to keep in mind. Lastly, in terms of where the competition goes, their strong competitive mode is through tech and manufacturing. They've, they have backward integration. They are using AI in all of their operations. But at the same time, when you take a look at the return ratios, they're low despite of the growth. And this is because of the cash flow problem. Because if you take a look at the projected ROE and ROCE for FY28, ROE stands at only around 11% and ROC just at 8%. So, this is one of the important metrics that every investor tracks, and that is something which is also an area of concern here. So, this is the overall perspective of the bull versus bear case. Of course, Q4 FY26 has been strong here, but valuations and return ratios are still a concern and overhang on the company.
Okay, and that's the reason why the bull and bear case absolutely fits well for this one. Rajesh, in terms of new age companies, you can call it for a Lenskart or a Grow, Eternal, Swiggy, Brainbees, all of them have seen very interesting moves. On the charts, do you find anything that's interesting?
So, if I go with all these companies, I think most of the companies have shown, decent rally, but, the rally has been fizzled out, and most of the stocks now in consolidation or slightly in the bearish trajectory, be it Swiggy, Eternal, or even Lenskart is still enjoying its, breakout level, which we have witnessed on the near-term, short-term chart. So looking at the today's reversal in the Lenskart, I think now stock is negotiating with its 20-day moving average supply zone. So if stock's able to surpass 510, then we could see some more buying interest in this counter. But those who are already on the long side of trade should follow the 480 as a stop loss. If someone look for little longer term, stock from this basket, I think Eternal is looking more promising from this space. Stock is, after this corrective move, stock is trying to make some, base building activity here. 210, 215 is the important level for on the downside, and stock is comfortably holding above these level. So I think Eternal can show good amount of really going forward, but one needs to buy and accumulate, and our horizon is around 280 to 300 for next 6 to 8 months.
All right, so that's the view on a lot of these new age tech companies that Rajesh just gave. But time to take a look at Bosch, because it's under pressure after the management remains cautiously optimistic for FY27 amid geopolitical uncertainties and supply chain risk. Puneet joins us with an entire perspective of what happened post the management con call. Puneet, over to you.
Well, thank you for that. It's definitely a good set of numbers for the company, but the commentary, as you rightly mentioned, driving the stock down today. So revenue up 13%, EBITDA up 20%, and margins at 14% was one of the highest they've done. But when you look at what's actually impacting the stock, there are three key things. The first one being that they've said that while the domestic economy largely remains steady, and that was a key positive reflected in the numbers as well, FY27 outlook currently remains cautiously optimistic is the word that they've used at this point of time, which shows you that, while the current geopolitical scenario is uncertain for H1, Bosch is going on with a cautiously optimistic kind of a scenario and not guiding for a very strong growth, at least for now. They've also said that key priorities will be to enhance the supply chain at this point of time, as well as manage the commodity as well as currency risk, which they have. The second key one, geopolitical risk, because the Middle East conflict continues to be uncertain. The third one was on semiconductor shortage. They had mentioned that while it has been resolved in the near term, overall supply chain continues to be remaining fragile at this point of time, and hence the uncertain outlook. Finally, there is some key triggers that you have to watch over the next year. CAFE 3 norms will come in April 2027. So you will start to see rollouts of models as well where Bosch get benefited. Regulatory requirement for the ADAS business for the two-wheelers will be also something to watch. And finally, the new joint venture announced with Wheels India. Right. Both those stocks, Wheels India's stock is up today as well. Yeah. That will be key because now they're looking at joint ventures for new product developments as well.
Right. Puneet, stay on because EPAC Durable is something that you track very closely, and that's also in focus. Reports of weak set of Q4 numbers and profit has declined 100%. I mean, what does that even mean and why has that happened?
Well, the key aspect that, the AC business has continued to be in a downtick momentum, and hence you've seen that impact on EPAC Durable as well. So one of the key, revenue profile, of course, is visible on, and stocks now gone down to 10%, 10.3% now. Revenue is down 8%, but the EBITDA is down 64% for the company, and hence margins compressing by 670 basis points. Profit had a 99% fall, essentially being wiped out, and the reason for that we'll get to in just a bit. The segmental sales also, you see 25% degrowth or fall essentially in the revenue for AC business. While there have been components that have done well, all the other segments haven't been able to comply because 60% of the revenue comes from the AC business as well. But essentially what has happened is that the company has not hit the revenue target to get the PLI benefit. So the 9-month number for PLI benefit was 32.4 crores. The company had actually had to reverse that in the last quarter, and hence the whole profitability has been wiped out. When you look at the FY25 number, the PLI number was 37.4 crores and the profitability was 55 crores. So largely you see the proportion of the PLI income on the total net income of 55 crores. So with this 32 crore reversal, you've seen the wipeout of the profits in quarter 4 and a fall in the whole year as well.
Okay, Puneet, thank you so much for getting us those details on both Bosch as well as EPAC. Rajesh, I'll take your quick view on EPAC specifically because, we saw a good green candle yesterday and today we're seeing a downtick on the back of how numbers have fared. But, your view technically, do you think that this is the bottom it's found? There could be some bounce back from here on, or there's still negativity which will, continue because volumes are not that strong today as well?
So, Mahima, if we look at little, medium-term to long-term structure is still on the weaker side. The stock is moving in down-sloping channel on a weekly as well as on the monthly chart, which is a sign of, sustained downtrend is, in this counter. Even on the monthly chart as well as on the weekly chart, the major supply zone is placed at around 270, 280 zone, which is very important for stock to, cross these level. Once stock crosses this level, then there will be a change of stance on the long-term chart as well as on the medium-term chart. Even on the near-term chart, stock is still struggling to cross 20-day moving average, which is placed at around 260. Even in the previous day up move, 260 acted as a major supply zone, and again stock corrected. So bottom is still not done. Stock needs to cross 260, 270 trajectory at least to confirm ki yes, bottom is taken place. At this juncture, still risk is there on the downside. If stocks breaks below 225.
Rajesh, I'm going to interrupt over here. We just have ITC numbers which have come in. The profit number is coming at 5,113 odd crores versus an estimate of 4,900 crores. So marginal beat there, almost a 200 crores uptick coming in terms of where the net profit number goes. That's the only number that I have right now, but 5,113 crores. Let's just pull up ITC chart on the screens and see what's happening on that one. If that stock is reacting, yes, a mild spike that has started to come in terms of ITC on the net profit number that is flashing on the bottom of your screens. That's the first cut on NDTV Profit. ITC 5,113 odd crores. We need quick view, at least in terms of the profit number. Estimate was 4,900 odd crores on a consensus basis. Revenue has come in at 16,000 51 versus an estimate of 18,000. So that's a major downtick coming in terms of the top line. But on the bottom line front, it seems a beat of around 200 odd crores is what we are seeing. Mahima is just trying to open the release and get all the details as she tracks the space closely. But we need a quick first cut in terms of ITC.
It's a mixed bag. I think they've been able to grow their margins. But, fall in revenue is something that we are not expecting. And hence, in my opinion, it just remains a mixed bag.
I think, largely if we take a look at how, the EBITDA number could be impacted is because of the excise number. I mean, just look at that. A 1,300 crore for Q4 FY25 versus that of a 5,000 crore on the back of course, the duty hikes which we've seen for the cigarette business, and that largely impacts the EBITDA number. Let's see as to, how those numbers. But overall, I think, Hiral, profit is a beat, which was not expected, honestly. Overall profit being a beat is something that's possibly, making that stock spike as we speak, a % higher. Revenue, this revenue would largely be impacted because of the price hikes that they've taken, and that could impact the volumes, the cigarette volumes.
The EBITDA number
and
is
that's
at 6,426 odd crores is what we're tracking. What was the estimate looking like? Because 6,426.
So 5,900 is what? So it is beaten the estimates.
So I think in terms of the profitability, it's a beat. In terms of operational matrix, also it's a beat. It's only on the revenue front where it is a downer. And that's where the street is reacting in terms of where the overall the stock goes right now. Vineet, overall, if you have to look at ITC from here on, what are the key monitorables? Because apart from the three numbers, I know volumes is one part of the business. Mahima, if you can just tell us, what is it looking like in terms of the cigarette business revenues? Because that also becomes crucial over here. We've seen that excise impact. I don't know if it will come in this quarter or will it be in the first quarter of FY?
So partially in this quarter as well, but cigarette numbers have been slightly better. It was at around that 8,700 crores in Q4 FY25, but that's increased to almost 11,000 crore in this particular quarter. FMCG overall has not done much. Just a 300 crore of an uptick is what we're seeing in the FMCG business. Was doing in terms of Q4 FY25 as well. So cigarette business is where probably there is some uptick, but this is on account of
5,488 odd crores.
On account of price hikes
also.
Not the volumes.
Yeah, so the price, so the volume number will become crucial because after the price hikes that have come in, the question was whether the volumes will dip or not. Vineet, cigarette EBIT at 5,488 odd crores is what you're looking at. In terms of the overall EBITDA for ITC, 6,426 odd crores. And you have the profit number also, which has beat estimates. With these numbers, I know you've given your first cut a mixed bag, taking the top line and bottom line into consideration. But when you're looking at the EBITDA and the EBIT number for the cigarette business, any comments that you have?
I think they've done relatively well on the managing the operating profitability. But the moot question is, how do they manage their business in FMCG? I think it's not done that spectacularly well. And my take is that, the company has been growing, but not consolidating on the, their rollouts that they have done. So existing businesses are remaining stagnant while new businesses that they launch are adding to the revenue. So until and unless, your already rolled out products, if they don't gain traction, I think somewhere the market recognizes that. Also, they're losing market share in cigarettes. So keeping all these things in mind, for me, it's going to be more of a drag on the entire performance.
FMCG is also a drag because the expectation was that the FMCG business will grow at least in early double digits. Around 11 to 12% is what the street was estimating. But unfortunately, that growth has come in only at 5%.
And so, look at the stock chart. From that spike that we saw, it's actually cooled off. Mayuresh Joshi also joining in. Mayuresh, understanding that you have the numbers, the profits have actually beat what the street was estimating. Revenues have been below. Your cigarette EBIT has come in at 5,488 odd crores. Your EBITDA also has beat estimates, but as Mahima was just pointing out that the cigarette EBIT is mainly in terms of the price hikes that have come in, does not seem to be in terms of volume growth. And if you're talking about the FMCG business, I think that growth is also a downer as compared to what the street was estimating. How are you reading into the numbers? Because the stock price is not really giving you a good picture right now. It saw an initial spike and cooled off completely right now.
It was expected that the cigarette EBIT will be higher because of the price hike that they had taken. Not seen the granularity of the numbers, but the other FMCG business, if they are below par, I think that is a cause of concern, because then you're probably looking at some element of an impact in the coming few quarters, both in terms of input cost pressures and some part of the El Niño effect playing out, leading to a possible demand contraction. The other FMCG business, ex-cigarettes, might actually have a poor or a subpar issue going forward as well. In terms of the overall numbers, my own sense is that the bottom line is better than what the street was probably estimating, but the revenue and the absolute EBITDA number are a tad bit below par.
Any idea or any estimates as to how volumes would have fared this quarter, considering that there was price hikes, which could put pressure on volumes eventually? So, any rough idea of range in which volumes could be?
It might be mid-single digits, but we'll have to wait and watch out for the same. And again, I think the commentary thereof, because I think their competitors have probably just alluded to a lot of factors related to how cigarettes might play out, even for them in the next few quarters. So my own estimate, mid-single digits is something that the volume growth might have.
All right. So, volume growth is the key that we'll be watching out for. Thank you, Mayuresh. Thank you, Rajesh. And thank you, Vineet, for joining in. Always a pleasure to speak to you. And we are pretty close to closing levels. But yes, we are closing pretty much on the flat line. 23,650 is what you're tracking in terms of Nifty 50. Bank Nifty as well. Down tick of around 0.2% coming in there. Flattened line on the mid cap 100. And if you look at small cap 250 as well, that was where the green shoots were. Let's see if the small cap 250 is also indicating any bit of an uptake, but clearly the pressure has continued. The advanced decline ratio has remained absolutely kind of steady from where we started off the trade in terms of the show today. If we can just quickly pull up the small cap 250 on the screens as well and see what's happened there. But 23,648 is what you're tracking there. There you go. Pretty much there is 0.7% higher in terms of small cap 250 as well. So that's where the buying has been. And if we can just have the heat map in terms of Nifty 50 to understand if any moves came in on that front. Grasim, Indigo, Apollo, more of reds now versus the greens. ITC absolutely on the borderline. FMCG names, some of them under pressure. Tech Mahindra under pressure with Infosys, and you had a Tata Consumer, and you had some of the financials which also came in under pressure today. But Grasim kept the gun shooting. Indigo was up in trade. Apollo Hospitals reacting to numbers. HDFC Life, Max Healthcare. So some of the pharma majors along with the Hindalco and Wipro. In fact, Hindalco will be reporting numbers tomorrow, so that's going to be interesting to watch out for as well. But clearly, again, it's become an even Stevens market. That tug of war is something which has continued. We're ending at 23,654, below that support level of 23,700 that we've been tracking closely. Let's see what comes out of the interministerial meeting also, which is slated today at 5 p.m. Any announcements there will be important. Power, we've already heard, and you have the RBI interventions that will be keenly watched out for. But completely out of time with that, it's a wrap on this edition of India Market Close from the team that put the show together, Mahima and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened thus far in the trading session. But before we do that, let's quickly take a look at the markets. First things first, and the last trade in fact ended another volatile day of trade in the red, with the Nifty closing near the day's low. And even the Sensex also shedding nearly 200 points. Traders remain cautious throughout the course of the session amid global uncertainty, while profit booking in heavyweight sectors, that's something that kept markets locked in a narrow range as well. Moving on then, let's also talk about the sectoral picture at close. You know, you do have IT and FMCG stocks that drag benchmarks lower, while resilience in realty and auto counters really helped limit the downside. And moving on, let's also talk about ITC that reported its numbers just a little while ago. You were not looking at much of a reaction coming in because this was very close to the market closing as well. But you know, when you talk about the operational number, it's a good set that you're looking at that's coming in well ahead of estimates as well, and profit beating expectations in fact. But when you talk about the revenue, that's fallen short, highlighting a little bit of demand pressure there. It also announced a final dividend with the record date also set for later this month, and that's the update that you're looking at. Onto Sammaan Capital that completed the cleanup of its troubled legacy book with bad loans dropping to zero and no fresh provisioning needed. That gives the lender a much cleaner balance sheet as it enters a new growth phase, and that's something that the street was cheering as well, with that 9% uptick coming in. In fact, the company is also laying out an aggressive expansion plan, even as the March quarter slips into a sharp loss on account of one-time hits as well. And on to EPAC Durable, that reported a weak set of numbers. In terms of the operational quarter, revenues under pressure, margins sharply lower as well. Profit is nearly wiped out, impacted by the reversal of PLI income, which also weighs on the full year performance. The miss on profitability, in fact, remains a key concern despite some support from operating gains. And on to Sansera Engineering, that delivered a strong set of numbers. And look at the street also cheering that, with that 15.4% uptick coming in. So double-digit uptick coming in for this particular counter today. And when you take a look at the earnings fine print, it's clear why the stock was buzzing away in trade. You're looking at robust growth across revenue and profitability, margin improvement. In terms of the margin improvement, that was a quite sharp improvement as well, aided by a better mix. The order book also remains healthy with strong visibility going forward, while international business continues to drive momentum with faster growth. And moving on, let's talk about brokerages that remain positive on something like a Grasim that was also buzzing away in trade, 6.4% uptick coming in on this particular counter. And you do have both Jefferies and Citi maintaining a buy call. They are seeing a strong finish to the year driven by improvement in the core business, with momentum expected from cement and paints. The Holdco discount is also seen narrowing, supported by paints growth as well, and steady dividends coming in when it comes to Ultratech. And onto the brokerage view coming in for something like a Samvardhana Motherson that was also buzzing away in trade. About a 4% uptick coming in here. And when you talk about the brokerage verdict, Jefferies and Morgan Stanley both remain quite positive on the growth outlook, driven by new businesses like electronics and aerospace. However, Citi stays a little bit cautious, flagging cost pressures and concerns on global demand, even as recent results offer a little bit of support. And onto Apollo Hospitals that reported a strong set of numbers in the fourth quarter, with growth across key segments led by higher hospital volumes and better pricing as well. Continues to support performance, while the healthcare business also delivers healthy momentum, keeping the overall growth trajectory intact. When you talk about this particular counter, it was also buzzing away in trade with that 3% uptick coming in. And onto something like a Lenskart that was in focus. Morgan Stanley stays positive on Lenskart after another, strong quarter really coming in. Growth momentum remaining intact as well. And the focus is on sustaining volumes, while margins are seen stabilizing at healthy levels. Expansion into smaller towns and steady store additions continue to support the long-term growth story. Onto MedPlus that reported a strong set of numbers in the fourth quarter as well, 3.7% uptick coming in for this particular counter, and you're looking at steady growth when it comes to both revenue and profit. Margins remain stable, supported by a rising share of private label products, and the continued shift toward higher margin offerings is something that really helps sustain overall performance momentum. And on to Jubilant Foodworks on the flip side that reported a muted set of numbers. Weak same-store growth is something that you were looking at. Pressure across core operations also weighed on this particular counter, down about 7.8% at close. Profit declined despite some margin improvement, while cautious management commentary as well. That was something that kept a little bit of a caution really maintained in this particular counter. Underperformance versus peers is also something that weighed on sentiment. Onto the brokerage verdict coming in here as well. When you talk about Jubilant, now this stock was under a tremendous amount of pressure, but when you talk about the brokerage verdict as well, Jefferies stayed constructive but cut its target price. Morgan Stanley remained neutral, citing margin headwinds, while Macquarie, that's the one that stayed underweight, flagging growth concerns going forward. Demand recovery and cost pressures remain the key monitorables going ahead. Let's also talk about Bosch that delivered a steady set of numbers with healthy growth when it comes to revenue and margin, supported by stable domestic demand. However, shipments take a hit from geopolitical disruptions, even as supply chain issues ease. Management remains cautiously optimistic, with focus turning to resilience, but also cost management and even future growth triggers. Onto Nucleus Software that delivered a solid set of numbers in the fourth quarter, and look at that 8.8% gain coming in. That should tell you a little bit more about the earnings fine print as well. But when you talk about the sharp jump in profit, that was quite the trigger coming in. Revenue growth also remains steady. Margins see a slight improvement, reflecting stable operations. Now, in terms of what else has happened this quarter, the company has also announced a final dividend of 12.5 rupees per share, signaling confidence when it comes to performance, but also cash flows. Let's also talk about Emami on the flip side, that reported a weak set of numbers that weighed on this particular counter as well. Downtick of about 3% on the back of pressure on both revenue and profitability. Margins contract sharply, and even the profit declined on the back of softer demand. The domestic portfolio, when you look at that as well, it remained resilient, but headwinds in the international markets is something that investors were tracking, especially due to geopolitical issues coming in that continue to weigh on the overall performance. Let's also talk about WeWork India, that delivered a strong set of numbers with sharp growth in both revenue and profitability. Demand for flexible workspaces remains robust, supporting higher occupancy but also better realizations. And when you talk about this strong set of numbers, it's really lifting sentiment, with the stock really rallying in trade following the results. Look at that 19% thereabout gain coming in on this particular counter. Let's also move on and get to some more news and updates. The Reserve Bank of India could announce a record surplus transfer to the centre, with estimates pegging the payout between 2.7 to 3.5 lakh crore rupees for financial year 26. The RBI board is scheduled to meet on Friday to consider the dividend proposal. Sources are telling NDTV Profit that gains from forex intervention, investment income, currency printing and a weaker Rupee have significantly boosted the central bank's balance sheet, potentially paving the way for another bumper payout to the government. Let's also move on and talk about electricity demand surging amid intense summer conditions as well, and the government has activated an emergency action plan to avoid power shortages during peak months. Power plants, in fact, across the country will remain fully operational through June and July, with no maintenance shutdowns allowed during this period. Officials estimate that the move could generate an additional 15,000 megawatts of surplus power also coming in, and the centre has also assured adequate coal availability, while hydroelectric plants will also be strategically managed to meet peak demand requirements. Let's also move on and talk about EV demand as well. That's in focus. India's electric vehicle momentum is gathering pace as rising petrol and diesel prices push more consumers toward EVs as well. Tata Motors passenger vehicles also told NDTV Profit that it is witnessing strong broad-based growth in inquiries as well as bookings, with demand accelerating further in the recent weeks amid developments in West Asia. When you talk about some of the other companies as well, something like JSW MG Motor India said that customer interest in EVs rose over 23%, and that's just between March to April versus the start of the year. While you do also have M&M that has reiterated its commitment to electrification and cleaner mobility. Moving on then, let's talk about Nvidia, that is signaling confidence that the AI boom still has significant room to run. You do have the CEO who said that the chip giant can sustain blockbuster growth through a broader customer base and next generation products as well, even as competition really intensifies. Nvidia has forecast stronger than expected second quarter revenue, announced an $80 billion share buyback and sharply increased its dividend as well. Now, the company is also ramping up supply spending amid a global memory chip crunch, while Huang also highlighted the upcoming Vera chip targeting a massive $200 billion market opportunity. Let's also move on and talk about some IPO news then. SpaceX, that has filed publicly for what stands to be the largest ever IPO, revealing billions in losses, and the super voting share plan, which allows Elon Musk to keep the company under his control. According to a filing with the US Securities and Exchange Commission as well, you do have the AI giant that is giving the billionaire the power to outvote anyone else and promising him outsized rewards if he can pull it off. In fact, when you talk about this particular filing, it's showing the goals that Musk would need to hit, which include a human settlement on Mars with at least 1 million inhabitants. Before that can happen, SpaceX is also tasked with the task of making the dream of data centers in space a reality. The question for investors, though, at this point is whether the sum of Musk's aspirations for SpaceX are worth valuing at as much as $2 trillion, viewed in light of financial disclosures that seem minuscule by comparison. Moving on then, let's talk about European space stocks that rallied sharply after Elon Musk's SpaceX filed for a stock market listing, sparking fresh investor excitement across the satellite and aerospace sector. Shares of a bunch of these companies, in fact, all gained an early trade as markets bet that the SpaceX IPO could really drive renewed interest and valuations across global space-related companies. And let's also move on and talk to you about an Australian court that has upheld a fine against Elon Musk's X Corp in a case linked to child safety compliance on social media platforms. The dispute began after Australia's internet regulator sought details on how the company was tackling online child exploitation. Now, X had challenged the request, arguing that it was issued before Twitter merged into X Corp. However, the company has now admitted wrongdoing and will pay a higher penalty along with legal costs, bringing the 3-year legal battle to a close. And let's also talk about Samsung Electronics that has temporarily avoided a major labor disruption after reaching a last-minute tentative wage agreement with its largest workers' union. The strike, which threatened operations at the world's biggest memory chip maker during a booming AI demand cycle, has now been suspended pending a union vote later this month. Now, this dispute centered around bonus distribution, with workers in Samsung's fast-growing AI memory chip division set to receive significantly higher payouts than employees in other business units. And let's also talk about Britain that has secured a major trade agreement with the Gulf Cooperation Council, a deal expected to add nearly $5 billion annually to the UK economy over the long term. The agreement deepens economic ties with some of the key Gulf nations, including Saudi Arabia, the UAE, and Qatar as well. And this is, in fact, coming in at a time when the region continues to grapple with geopolitical tensions and supply disruptions. Following the Iran conflict earlier this year, the pact is also seen as part of Britain's broader push to strengthen strategic trade partnerships beyond Europe. And let's also talk about Britain that has reported a sharp drop in long-term net migration. So that is one factor that you're also looking at as an important update coming in from there, with numbers nearly halving, being half in 2025 to their lowest levels since the post-Brexit immigration system was introduced. According to the Office for National Statistics, net migration fell to 171,000 in the year ending December, down from 331,000 a year earlier. And sharply below the record peak, mind you, seen back in 2023, the decline is coming in as tighter immigration measures introduced by the government begin to significantly curb arrivals into the country. Let's also talk about foreign direct investment into Germany that has fallen for the 8th straight year, hitting its lowest level in nearly 2 decades as well. A survey by professional services firm EY shows investment projects, in fact, declined 10% in 2025, weighed down by high taxes, elevated labor and energy costs, and even persistent bureaucratic hurdles as well. Despite the slowdown, Germany still remains Europe's 3rd most attractive investment destination after France and the United Kingdom. Let's get you some national news now. Delhi NCR is staring at major transport disruptions as commercial vehicle unions launch a 3-day Chakka Jam protest against the hike in environment compensation cess. More than 68 transport unions, in fact, have backed the agitation, which is expected to impact cabs, auto rickshaws, goods carriers, and several public transport services across the region, with truckers, taxi operators, and private bus associations joining hands. Commuters could face significant inconvenience while supply chains and daily logistics also come under pressure. And let's also talk about the resultant impact of the strike that I've just talked about. A 3-day transporter strike across Delhi NCR is threatening to disrupt this supply of fruits, vegetables, milk, and other essentials in the national capital and NCR region. Truck operators have halted services in protest against rising green cess, like I mentioned, bringing nearly 1.6 million good vehicles to a standstill. Traders at Delhi's Azadpur Mandi are saying that the impact is already visible, with sharply lower vehicle arrivals. Supply shortages and price pressures are expected to intensify over the next 2 days if the deadlock continues. Let's also move on and talk about Union Education Minister Dharmendra Pradhan, who's chaired a high-level review meeting with security and intelligence agencies ahead of the NEET UG re-examination. The government has directed strict action against fake telegram channels and anonymous groups accused of spreading misinformation around the medical entrance exam. Officials are saying that the focus is now on ensuring foolproof security, identifying vulnerabilities in advance, and maintaining a fair and transparent examination process. Representatives from Meta, Google, and Telegram also attended discussions on tackling online misinformation linked to competitive exams. Let's also move on and talk about Delhi, that is battling intense summer conditions as the IMD in fact issues a yellow alert for severe heatwave conditions across the national capital that continue to soar, with authorities urging residents to avoid prolonged outdoor exposure during peak afternoon hours. And the extreme heat is also driving a sharp rise when it comes to electricity consumption, with India's peak power demand also hitting a fresh all-time high for the third straight day as air conditioner and cooler usage surges across the country. Let's also get you some international news then. A high-stakes diplomatic window is now open. The US and Iran are racing against time to finalize a peace agreement, with reports also suggesting a deal could be announced within hours. President Trump, in fact, has set a tight 72-hour deadline, warning negotiators to also close the deal quickly or risk escalation. Iran, while signaling openness to diplomacy, has really pushed back strongly, saying that coercion is not going to be forcing surrender at this point in time. With both sides exchanging proposals under pressure, the next few hours or days could really shape the future of this fragile ceasefire. Let's also talk about US President Trump, who said that he may speak directly with Taiwanese leader over a possible arms sale, a move that would mark a major break from decades of US diplomatic tradition. Washington, in fact, has avoided direct leader-level engagement with Taiwan since formally recognizing Beijing in 1979. China strongly opposed the comments, warning that the US warning them against sending what it calls wrong signals to pro-independence forces in Taiwan. The development is coming in amid rising tensions over Taiwan and renewed focus on the island's defense capabilities. Let's move on and talk about Melbourne's Avalon Airport that was partially shut down for several hours after a suspicious package triggered a bomb scare during security screening. In fact, police and bomb disposal teams were called in, leading to delays in domestic flight operations. Authorities later confirmed that the package contained a laser hair removal device in a hot chocolate container. Now, the passenger linked to the package was briefly detained and later released, while airport operations resumed after nearly 4 hours. Let's move on and talk about fresh diplomatic efforts that appear to be underway between Iran and the United States, with reports suggesting Tehran is preparing a response to a proposal sent by Washington. Iranian state media, in fact, is saying that the latest text has narrowed some differences, while Pakistan is emerging as a key intermediary in the indirect talks as well. And Pakistan's interior minister has already held meetings in Tehran, mind you. Army Chief Asim Munir also is expected to visit as back-channel diplomacy is intensifying at this point in time amid ongoing tensions. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested. And
D Street despondence continues as benchmarks end flat while Nifty manages to settle above 23,600. Small cap stocks witness stronger buying interest. Is it time to pursue bottom-up approach? Full analysis ahead on the show. Rupee strengthens after hitting multiple record lows, ends at 96.2 against the dollar, but as pressure remains amid rising geopolitical uncertainty, Commerce Minister Piyush Goyal says several steps being taken to prevent more damage. From record dividend payout to launching FCNR deposits, NRI bonds and more INR USD buy-sell swaps, sources indicate RBI-led several multi-pronged measures are underway to save the sliding rupee. US-Iran signal fresh peace talks as US sends new proposal to Iran. Pakistan steps up mediator's role after Pakistan's Minister Mohsin Naqvi met with Iran's Foreign Minister. Pakistan Army Chief Asim Munir is set to reach Iran today for back-channel talks. India's EV momentum is picking up speed as rising fuel prices drive consumers toward electric mobility. Tata Motors tell NDTV Profit inquiries and bookings have accelerated in recent weeks, while Mahindra & Mahindra and JSW MG echo the same momentum. Backing PM Modi's austerity push, CJI Surya Kant asks all high courts to hold online hearings. Most high courts already shift to virtual mode. Supreme Court too goes online on Mondays and Fridays. Delhi NCR transporters begin a 3-day strike against the environmental cess hike. Truckers, taxi and commercial vehicle unions join protest. Drivers also seek hike in auto and taxi fares. PM Modi to chair Council of Ministers meet at 5 p.m. today. Big reform review by ministries, energy, finance, railways to brief Prime Minister Modi to issue key guidance. Hello and Welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin the show by checking the markets first. B Street continues to sulk today as benchmarks end the day on a flat note. While Nifty managed to close about 23,600, the Sensex settled near 75,200 odd levels. Broader markets performed a tad bit better, especially the small cap universe, as the small cap 250 index outperformed the benchmark. In fact, let's go across to my colleague Parth Goel for a roundup of all the market action today.
So Nifty has ended on a flat note today, closing just above 23,650. Bajaj Finance and HUL were the top losers in Nifty, both of which were down by over 1.5% today. Grasim was on the other side the top gainer in Nifty, gaining over 6%. Broader market has outperformed the benchmark today, with Nifty Midcap 150 ending in green, up by 0.1%. This was led by Honeywell Automation, which was a top gainer in Nifty Midcap 150, up by over 20%, followed by IRB Infra, which was up over 8% today. Nifty Small Cap 250 also outperformed both of these indices and ended in green, gaining over 0.7%. This was led by Samman Capital and Triveni Turbines, both of which gained over 7.5% today. Now, if we move on to sectors, then sectors ended on a mixed note today, with Nifty Realty being the best performing sector, up by 1%, led by Anantraj and Phoenix Mills, both of which gained by 2.5% today. On the bottom side, we saw Nifty IT being the worst performing sector, down by 0.5%, led by Persistent and Coforge. And lastly, about sectoral trends, we saw Nifty Realty, Nifty PSU Bank, Nifty Energy, Nifty Auto and Nifty Oil and Gas end in green for the third day in a row, while Nifty Metal, Nifty IT have ended in green for the second consecutive day. On the other side, Nifty FMCG has fallen for the fourth day in a row.
Right, thank you so much for that, Parth. FMCG continuing to be the weak spot in the markets. But Indian markets are at an interesting inflection point, with extreme pessimism colliding with improving underlying fundamentals. We see one of the worst phases of relative underperformance, but at the same time, much of the negativity appears to be already priced in. And history suggests that even if indices remain range-bound, stock-specific opportunities can still generate significant alpha. My colleague Neeraj Shah, who is also executive editor for markets at NDTV Profit, joins in to explain how markets may shape in the coming months. Listen in.
Here's some key data points for people to mull over about when they're thinking about what could happen next to the equity markets. And I've borrowed some from a note from Morgan Stanley and some from our own research. So what can indices bottom out? I think India's share of global profits currently exceeds the global index weight by the highest margin. So if you take the share of global profits to the global index weightages and do a ratio, I think it's probably the highest that it has ever been in terms of the margin, which effectively shows that the valuation has gotten skewed on the downside relative to history. The trailing 12 months relative performance is the worst in history. This is as per a Morgan Stanley note by Rhythm and colleagues. So interesting to see that how from versus history, I think we are on some key footings. And the foreign positioning, of course, is known as at multi-year lows. Now, can this actually go down further? It sure could. Various FIs have come and spoken about they would still want to pursue the AI trade. But be that as it may, we do know that from here, the quantum of selling that could happen is hopefully going to be much lower than what it was maybe 12 months ago. Now, all eyes are on the government to pick up crucial reforms before the 2027 UP elections. I think there's a clean slate of 7 or 8 months that the central government has to enact some reforms without worrying about the overhang of state elections and what the response of that could be. So I think this is something that people are looking forward to. Some reforms coming in, tough as that they may be, but if they actually help investor sentiment around what the government is doing on reforms architecture, I think that could really, really help. That is one. And the other point is that even if the indices were to flatline, what could it do to markets and portfolios? So can the Nifty flatline while portfolios gain? I think I took a look at what the period of 2000 to 2013 meant for the US index, or the US stocks and the Japanese index. Now, the S&P 500 from 2000 to early 2013 traded near 1400 levels in 2000 and hovered around the same levels in 2012 to early 2013. But there were enough stocks which during this 13-year period did really well. In US, Apple rose by nearly 70 times. Amazon saw triple-digit returns as well. Monster Beverage multiplied multiple times as well. So and of course I'm picking and choosing here, but what I'm effectively trying to say is, if the index flatlined, it didn't matter if you were able to choose the right stocks for a long period of time. I'm nowhere insinuating that the Nifty will flatline for 13 years, but history is shown, even in FTSE 100, for example, 2002, 2013, it peaked near 7,000 in the end of 1999, and I think stayed around these levels for up to 2012 or 2013. And even in this case, which is the UK index, Reckitt Beckensur, Primark, etc., delivered strong returns. Rio Tinto outpaced the index as well. So there are enough. Japanese index in the early years also has some measures like this, or responses like this, if you will, or data like this. So the index may well flatline, but we may have enough stocks which could deliver returns. Shreyas Devalkar joins in right now, and I would love to ask him this. Shreyas, does it petrify you or worry you that we may be in a period, or have been in a period?
Well, after hitting multiple record lows in past sessions, Rupee staged a comeback in early trading today. The Rupee strengthened 0.6% to close at 96.2 against the dollar. This breather comes right after the RBI unveiled a $5 billion Rupee swap auction to infuse long-term liquidity in the banking system. However, the domestic unit remains under pressure and has declined over 5% this year already. Now, this is extremely concerning for the economy because we end up paying more for all our imports at a time when fuel prices have catapulted above $100 a barrel. On your screen, you can see Brent up 1.06% and US WTI up about 1.02%. In fact, speaking on the sidelines of the AmCham, American Chamber of Commerce Annual Leadership Summit in New Delhi, Commerce Minister Piyush Goyal told media persons that the government is evaluating a range of measures to prevent any sharper deterioration in the currency. Listen in.
With Rupee sliding, so what more measures can the government take to, contain the current account deficit widening?
We are monitoring the situation. All the various arms of government are working as a team. Several steps are under consideration. The situation is globally quite challenging, but we have the confidence and the courage of conviction that we'll come out winners even in this challenging time.
And amidst the weakness in the rupee, India could be headed for another massive payout from the Reserve Bank of India. Sources tell NDTV Profit that the RBI board is set to meet on Friday to consider its dividend payout to the centre for FY26. The payout is likely to be between 2.7 lakh crore and 3.5 lakh crore, potentially a record transfer to the government. Sources say a nearly 10% fall in the rupee against the US dollar during FY26 helped expand the rupee's balance sheet. The central bank also reportedly made gains through forex market interventions, investments, and currency printing operations. Because the RBI holds massive foreign exchange reserves, mostly in dollars and dollar-denominated assets like US bonds. So if the rupee falls, those same dollar assets become worth more when converted into rupees. But we've also heard viewers from our sources that the Reserve Bank of India is evaluating multiple options to help arrest the recent slide in the rupee. Sources tell NDTV Profit that the RBI is deliberating on the possible launch of FCNR deposits, that's foreign currency non-resident deposits, which could encourage overseas Indians to park more foreign currency with Indian banks. The RBI is also evaluating the issuance of NRI bonds, another tool used in the past to attract dollar inflows from Indians living abroad. My colleague Piyush Shukla now joins us with more details on the measures being considered.
Absolutely. We are hearing from our sources that RBI is holding internal meetings with all the stakeholders, with their staff, the forex department, and essentially the focus is on how to curb the depreciation in Indian rupee. We have seen yesterday the rupee hit around 97 level versus US dollar. Today the rupee recovered by around 80 paise to around 96.20 level. However, this continued depreciation depreciation in rupee is something which is concerning the regulator right now. So there are multiple options that are on the table. The RBI, as we are aware, just yesterday announced that they will be doing a $5 billion buy-sell swap, and we are expecting the sources indicate that there could be more such dollar buy-sell swap going ahead, dollar and INR. Further, the very anticipated talks on FCNR deposits, that also is on the table, although nothing has been finalized yet, but this is something that RBI could launch to arrest the fall, though there will be some charge that will be incurred, but the gains are pretty high. The inflows are expected at around 30-40 billion, more than $40 billion if this deposit scheme is launched. Furthermore, the government backed sovereign dollar bonds also is being talked about. RBI is further also likely to nudge PSU banks to raise their borrowings in dollar form. We are aware just 2 weeks back SBI announced that it will raise around $2 billion via foreign currency. So all these measures are being deliberated upon. There is no final say yet, but the RBI overall is working on a strategy to curb the fall in Indian rupee. Back to you.
Thanks so much for that, Piyush. And viewers, let's now take a look at some developments in the Iran war. Negotiations over Iran have taken center stage, with Pakistan stepping in as a key channel. Pakistan's Interior Minister Syed Mohsin Naqvi met with Iran's Foreign Minister Abbas Araghchi, signaling back-channel diplomacy as Tehran and Washington continue indirect discussions. And Pakistan's Army Chief Asim Munir is also set to land in Iran today. The US in the interim has sent a fresh proposal, with Iran expected to respond soon. But divisions are widening among allies. Reports suggest a heated exchange between Donald Trump and Benjamin Netanyahu. While Trump is pushing for a breakthrough deal, Netanyahu is set to favor sustained strikes to weaken Iran's military. The diverging strategies are fast emerging as a serious flashpoint in an already volatile West Asia crisis. But oil prices remain volatile amid peace deal uncertainty. You see Brent crude futures, as I was mentioning before, is hovering anywhere around $104 to $105 a barrel, and both benchmarks had dropped about 5.6% yesterday to their lowest in more than a week after Trump said talks with Iran were in the final stages. Listen into what Donald Trump had to say about Netanyahu.
What have you said to Prime Minister Netanyahu about Iran and how long to hold off on strikes?
He's fine. He'll do whatever I want him to do. He's very, very good man. He'll do whatever I want him to do, and he's a great guy. To me, he's a great guy. Don't forget, he was a wartime prime minister, and he's not treated right in Israel, in my opinion. I'm right now at 99% in Israel. I could run for prime minister, so maybe after I do this, I'll go to Israel, run for prime minister. I had a poll this morning. I'm 99%, so that's good. But no, he's a wartime prime minister, and I just don't think they treat him well.
Switching tracks to India, amid PM Modi's austerity call and consecutive hikes in fuel prices, EV makers say that the green segment is seeing a record demand. In fact, the management of Tata Motors PV and JSW MG Motor India told our colleague Danish Anand that customers are looking at affordable alternatives now. Let's go across to Danish Anand for more details.
Correct. JSW MG Motor and Tata Motors passenger vehicles have exclusively told NDTV Profit that, especially from the past few weeks, there is a greater demand for EVs that these companies are seeing. First, talking about Tata Motors, especially, Tata Motors is seeing an increase in the walk-ins as well as inquiries for electric vehicles that Tata Motors manufactures. Besides that, they're also seeing a high jump in bookings for EVs. On the other hand, if we talk about JSW MG Motor India, they have seen a 23% jump in bookings for EVs if we compare January to February 2025 and March till April 2026. So they're seeing a great demand for EVs, and one of the factors why there's a great demand is obviously the rising fuel prices that we have seen over the past 2 weeks. Besides that, PM Narendra Modi had also given a suggestion to the public to use EVs, and especially after these two big drivers, we are seeing that they're seeing more and more demand for EVs. Very largely, MG Motor India is of the view that the EV penetration the EV penetration will increase to 8% by the end of this year. So all in all, if we see in the backdrop of the West Asia crisis, electric vehicle companies are seeing greater demand for vehicles.
India Inc. has sounded a major warning over what it calls the 3Fs challenge: fuel, fertilizer and food. Industry body Confederation of Indian Industry says the West Asia crisis is putting pressure on energy prices, fertilizer costs and food inflation, and also the rupee. CII has urged the government to treat the three sectors as one linked economic challenge, warning that India's heavy import dependence on crude oil, phosphates and urea makes the economy vulnerable to global shocks. The industry body has recommended a series of measures, including a faster ethanol blending roadmap, LNG-based freight transport, direct benefit transfers for fertilizer subsidies, and stronger food supply management to contain inflationary pressures. But in the interim, let's take a look at an important earnings announced. ITC has reported an operationally strong fourth quarter, with margins coming in well above street estimates and profit also beating expectations. However, revenue growth remained muted and missed estimates, indicating some pressure on demand. The company has also announced a final dividend, with the record date scheduled later this month. Let's go across to my colleague Mahima to get a deeper sense on the numbers.
All right, so overall, if you take a look at the ITC numbers, it's a mixed bag because revenue did miss estimates, and this is largely on account of the excise duty increase that came in. And if you take a look at the excise numbers also, you know, they're up almost 4 times as compared to where they were in Q4 FY25. So revenue, missed in terms of where the estimates were at that 16,000 crore versus that of an estimate of 18,000 odd crore. But in terms of where, the net profit stands, it was a complete beat at that 5,000 crore mark versus an estimate of 4,900 odd crore. Margins stood at 40% versus that of an estimate of 33.2%. And this is the EBITDA beat, and the margin beat is largely led by the price hikes that the company has taken in order to offset the excise duty hike. EBITDA also stood at around 6,400 odd crores versus that of an estimate of 5,990 odd crores. In terms of the segment-wise performance overall, the cigarette business revenue saw an uptick of almost 27%. Again, this is on the back of price hikes and not volume growth. Volume growth, we spoke to an analyst and he suggested that it could be in the mid-single digit number, but we'd have to wait and watch out for that volume percentage number. Overall, EBIT saw a growth of 7% for the cigarette business. Agri-business revenue, however, did see a downtick of 16%. FMCG business, which was expected to grow around, in early double digits, just saw a growth of around 5%. And agri-business EBIT was down by about 30% odd. So this is the overall view of what's happened with ITC this quarter.
Thanks so much for that, Mahima. And in a move aimed at supporting Prime Minister Narendra Modi's austerity push, Chief Justice of India, Surya Kant, has said that all high courts across the country have been asked to conduct online hearings, with most of them already implementing the system. The remark came during a hearing where a lawyer urged that all Delhi courts shift to virtual mode for 3 months in the national interest. The CJI said district courts come under the administrative control of high courts, but also added that he has requested them to consider online hearings there as well. The Supreme Court has already decided to hear cases virtually on Mondays and Fridays, while also encouraging carpooling among judges to help reduce avoidable expenditure amid the West Asia crisis. In the interim, Goa is looking beyond its image as just a weekend tourism destination, with the state now pushing a work from Goa model to attract startups, entrepreneurs and long stay visitors. The aim is to build a stronger round-the-year economy and create more wealth locally. NDTV Profit, in fact, spoke exclusively to Goa's Chief Minister Pramod Sawant to understand the vision. Let's listen into that conversation.
Right, Goa is known for many things. It's beaches, it's tourism, it's nightlife. But one thing it's not known for is having the Chief Minister sit at a shack here and working out of a shack here in Baga Beach. Thank you so much, Mr. Sawant, for taking time out for NDTV Profit. We're here witnessing some sort of a pivot that the Goa government is also making in terms of boosting Goa as a work from home, as a vacation destination. Talk to us about the vision behind this.
As you rightly said, for the vacation destination, our tourism minister and IT minister, both the ministry have come together to start with the Shakathon 2026. This is a new concept to work from the beach. It is not only to the work from the home. Now, already the Prime Minister Narendra Modi ji has appealed to the work from the home. But most of the time, the people has got tied up to work from the home. So they can come to the Goa, they can take the stay homes and everything, and they can start to work from the beach. This is the new concept. Already we are creating the infrastructure which is required for them. So they can at least start their works from the beach. So as I rightly said, beaches is Goa is not only for the sun, sand and sea. Goa is also for the startup. So this is a new concept we have started.
Viewers, as it becomes hotter, our power consumption is also going to increase. And therefore, the government has rolled out an emergency plan to tackle this surge in power demand. We have learned that the power demand may hit 283 gigawatts in the month of July. And therefore, the government is coming up with some measures like no maintenance allowed during June and July in the summer peak season. My colleague Sesa now joins us to share the measures that the government has exactly taken. Sesa.
The government has come up with an emergency action plan to meet rising electricity demand during the summer season, and senior officials from the Ministry of Power briefed the Parliamentary Standing Committee on Energy on the same. Now, what we are given to understand is that officials have informed the committee that power demand has hit a record high of 265 gigawatt this week, and demand is further projected to rise 283 gigawatt in July. Sources said under the plan, the government has decided that all thermal power plants will remain operational during the season, which means that no maintenance shutdowns will be allowed. Officials also said that this particular move is expected to boost supply by 15,000 megawatt in order to manage the expected spike in demand.
Viewers, Delhi NCR is witnessing a major transport disruption as truckers, taxi operators and commercial vehicle unions begin a 3-day strike against the Delhi government's environment compensation cess hike. The protest is led by the All India Motor Transport Congress and will continue till May 23rd. Unions have called the policies of the Delhi government and air quality panel unjust for the transport sector. Commercial vehicle drivers groups have also demanded a hike in taxi and auto fares, citing sharp rises in CNG, petrol and diesel prices. Meanwhile, some auto rickshaw unions have also distanced themselves from the strike, even as transport bodies warn of widespread disruption across Delhi NCR. Amid closely watched negotiations around the proposed India-US trade deal, Commerce Minister Piyush Goyal has indicated that the chief negotiator for the agreement may visit India next month. The Commerce Minister said the negotiator is not part of the current visit, but also added that plans are underway for him to travel to India as both sides continue to push forward on the trade pact. Meanwhile, US Ambassador to India Sergio Gore has expressed confidence that the deal could be finalized in the coming weeks or months, saying both countries need candid and constructive engagement on export controls and technology flows. Listen into the exact remarks of the Commerce Minister and US Ambassador to India.
I think he's not coming with him, but there is some plan for them to come next month.
To all of you who have asked, what is taking so long? It has been a year and a half since we started these negotiations on the trade deal. To put in perspective, the European Union took almost 19 years. And so we are confident that over the next few weeks, over the next few months, this trade deal will get finalized. It will bring the stability and the opportunity for both of our sides. We need candid and constructive engagement on export controls and technology flows, grounded in trust. And we need strong intellectual property protection to encourage innovation and investments.
And viewers, there's some crucial update on the Pulwama attack. Hamza, believed to be one of the key masterminds behind the Pulwama terror attack, has been killed. He was shot dead by unidentified gunmen in Pakistan-occupied Kashmir. According to sources, Hamza was attacked by unknown gunmen outside Ames College in POK's Muzaffarabad. He sustained multiple gunshot wounds and later succumbed to his injuries. Indian security agencies had long listed him as most wanted. In 2022, the Ministry of Home Affairs has officially designated him. In fact, in 2022, the Ministry of Home Affairs had officially designated him as a terrorist. According to the ministry, he played an active role in spreading terror across Pulwama and South Kashmir, recruiting youth into terrorist organizations and raising funds to support terrorism. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit. This was Malika Mishra. Thanks so much for watching.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and it's a very interesting show where I get you companies which are buzzing on earnings, hidden gems, and also a lot of retail interest, and I get you these interesting companies for you. And today also there's a very interesting company, but before that, try to guess it. The first hint, it's a certification services company for natural and lab grown diamonds.
The company's promoter is Blackstone Group. Interesting, right? Company has come earlier in KYC also. That's another hint I'd like to give you. And they've delivered a strong March quarter. Interestingly, from January lows itself, the stock itself is up 25% as well. Talking about gem and jewelry, but the company is a certification company. So the company in focus today in KYC is going to be International Gemological Institute. This is the company which we are talking about. The company has come out with a good set of numbers. But what are the key questions we will try to ask? Of course, on the earnings and the outlook going ahead. Let's put out the key questions, for this company. The first one is definitely going to be on the growth expectations for FY27. Is there any change in the margins, change in the sales outlook, volumes? That's what we'll talk about. Also the LGD, which is nothing but lab grown diamond. How's the volume looking like? Is there any, changes happening in this certifications for this segment? PM Modi recently urged to buy less gold, but will this impact the studded jewelry volumes? That's also a key question a lot of investors have been putting up. The Middle East conflict, what happens on the impact on business? Remember, the company has, offices in Abu Dhabi and Dubai as well. Apart from this, the AGL acquisition, that's where a bullish commentary is coming in, especially on the diversification part. That's something we'll be watching out for. And also, the diamond prices, they have fallen almost 50%. Does that impact the demand, and is there a second order impact on the company? Also, apart from this, the 3-year sales CAGR is of 25%. Will this growth momentum continue, or because of a higher base, there might be a little bit of moderation going ahead? And of course, we'll be asking the certification gap. Is it widening between LGDs and the natural diamond segment or not? So these are the key questions. And to put that in perspective, we'll have the global CFO of the company, Ishwar Iyer, with us. But before that, let's try to learn about the company. What does this company always do? Or you could say, what does the company's main operations are? Of course, the certification and accreditation of diamonds, colored gemstones and jewelry is something their core business. And to get more things in perspective, of course, they do the grading reports for the diamonds and this colored stone origin reports as well. They have an education setup also, and 55 to 90% market share they are having across their key categories. And interestingly, apart from this, the backing is something which the street is quite bullish on. The promoters is Blackstone, and of course backed by some really large institutions globally as well. Also, let's look at the other details about the company. They have transitioned. If you're tracking this company, now it's April to March. Earlier it was on a calendar year basis, so that's an important point to mark. And the global network of 36 labs and 21 schools of gemology across 10 countries. That's what we are going to talk about. And also the revenue mix. Let's just have a look how things are panning out. Largely lab grown is 60%. That's the majority I'm talking about. After that, there is some kind of a breakup. Of course, the natural diamonds, that's around 15%. The remaining goes for the jewelry and the gemstone segment. This is where their certification they do of these key products. But March quarter highlights, it was something very strong. The total certifications went up 16% on a year-on-year basis. And also, if I give you more details, let's just pull up other key triggers, and there was a strong growth momentum on the certification of their key business segments as well. Also, the bullish commentary is coming on the AGL acquisition, and that's coming from the management. So we'll try to understand what are the incremental benefits actually there. The average realization prices, they did go up by 4% on a year-on-year basis, coming in at 987 rupees per share. The reason is the increased mix of natural and lab-grown loose stones, and that is why the average selling price, which is called ASP, has gone up. Largely, let's see the industry, how things are panned up, and this is a very important takeaway. 4 times there's a production growth coming in the last 3 to 4 years. Also, looking at the industry size for the India is almost $0.6 to $0.7 billion. For the global, look at that, that's $10 to $13 billion. But how the CAGR growth is looking like, that's around 13 to 15% for India, and for global, it is around 6 to 8%. So if you're understanding the industry, do take a note or take a screenshot of this data. What works for the company? Of course, strong operational and financial parameters are there. High ROCE company, Blackstone as a promoter group. Things are looking really strong here. And also one positive point is it's a debt-free company. So largely these are the key positive pointers coming in. But what is there, where is the lack happening, where is the concern? There is a lack of analyst coverage in this stock. Secondly, IPO, post its IPO, it was in the year end of 2024. After that, there hasn't been any major institutional buying post the IPO, and it's almost 1.5 years now. The benefits of the recent AGL acquisition will take time. It's not that it's going to happen next quarter, it's going to take some time, and that is what a little bit of concern or caution would be there if I am analyzing this company. But to analyze this company more in KYC, I'll be getting you those 8 parameters where we judge a company. And interestingly, there includes income statement, balance sheet, cash flow. These are the official, financial ratios to track. Return ratios, I'll get you both the ROCs and ROEs. And don't worry, Street Cred also will try to understand from the IPO price, has the company made any money or not? Shareholding, of course, we spoke about valuations. The company doesn't have a peer, so we'll be judging their peak and the current valuations, and of course the outlook on the industry going ahead. So 8 parameters for the KYC in this show. The first one, let's start with, that's the income statement, and largely the 3-year CAGR, revenue, EBITDA, PAT, all of them growing 30% plus. So a good, healthy, income statement growth in the long-term basis. But the Q4 numbers is something which I was very bullish on, and that is where we are seeing a good momentum happening. If you could just show the Q4 numbers, and this definitely beats whatever the expectations was there in the street, a year-on-year basis. There is a good growth coming, and they're sustaining it. The question is, will they sustain going ahead or not? Let's pull up the margins also to see what has happened. Remember, most of the data is calendar year, and now they are changing the reporting period, and there is a good up move in the margins also at 64% in first quarter calendar year 26, or let's just put it March quarter to simplify it for your analysis. So net income statement is a strong thumbs up. Let's look at balance sheet. Remember I mentioned that the company is debt-free company, so that's a good sign. A healthy balance is also there of 464 crore rupees, and if you have a promoter like Blackstone, you can expect that the balance sheet and the working capital will be maintained very professionally, and that's what we are seeing. So balance sheet is also a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, all of them are ticking. But cash flows, let's see what's happening. And remember, the company has come earlier in KYC also, and I'll give you the entire history of it, but you need to be stay tuned with KYC right now. A little bit of variance here in the net cash flows. Of course, some adjustments are there when it comes to the investing in the financing segment, but largely from the cash flow operations, it is a decent growth, and the conversion is also pretty decent. So let's keep it neutral and give this a neutral rating when it comes to the cash flow segment. Let's talk about the return ratios. And remember, this return ratios numbers for the last 2 years we have gotten, it's roughly from 48% was the ROC, and now it's at 45%. There's an adjustment also. Let's pull up the ROE numbers to show you. And remember, this is a very high return ratio business. Same thing story happens here as well. Remember, there was an adjustment also which the company has taken in place, and because of that, this return ratio minor hit has come in. If you compare that, this is the reason for it, the ROE adjustment for a fresh equity issue. It was there in the month of December 2024. But nevertheless, ROE, ROC strong is dhande ka, and we know that by now. Also, let's talk about the shareholding, what has happened. The promoter shareholding, of course, we spoke about it. Blackstone is the group here. But my concern is, we had good names in the IPO, but after that, have the good names added positions? No, it hasn't, and it's been almost 1.5 years. It's largely same. Actually, FIs have reduced a little bit. It's coming in at 9%, and DI's holding has been flat. No major move for the public also. So largely the institutions are holding most of the stock. So it's a neutral rating right now when it comes to the shareholding. But the question remains is, has the stock made money for retail or for the investors? That's the key question. And remember, from January lows, I had mentioned the stock is up 25%. But the concern is from here, from its lifetime high levels, especially during its IPO time, the stock was, trading at a pretty stronger rate. It's down 43%. It hasn't recovered yet. And also from the IPO price also, there is a fall. It's down 12% from 1 year basis. Also, the stock is down 7%. So concern is there when it comes to the overall performance, because that money hasn't been made yet. Because of that, I'm going to give this a thumbs down. Let's talk about valuations, how things pan out. And largely the peak valuations are 41 times, especially during the euphoria of the IPO. But after that, correction has happened and it's at 30 times right now if you compare that with the 12-month trailing P. So largely valuations seem neutral right now. I can't say very attractive because there's just only one company. What's the sectoral valuation? We need to give it more time. It's just been 1.5 years. So I'm going to give this a neutral rating as well. But outlook, let's see what's happening here. And outlook seems to be turning more bullish. I just read the recent, management commentary, the bullish commentary coming on American Gemological Labs. That is something which we need to talk about. LGD, the lab-grown diamond, is definitely at inflection, and now the industry is moving towards volume. Zyada volume aayega, zyada certifications karenge to simplify it for you, and also a good visibility comes for the revenue. Now, are they using AI to increase their operational efficiencies? That's what we'll try to understand, and if yes, will the margin outlook go up? And the volume growth, pricing stability and operating leverage already exists. So company is reiterating that statement. So net, the outlook remains pretty strong. And of course, Indian government recently standardized a terminology for this lab-grown diamond. So more you see, more quantification happens, more regulations come in, so more certifications also come in. So it's a strong thumbs up when it comes to the outlook. Let's see what's the final rating in the KYC segment for International Gemological Institute, and largely income statement, balance sheet have been really strong. Cash flow is decent. The concern is definitely not here. The concern comes in the street cred because the returns haven't come in for the investors, and at the end of the day, everybody wants returns. Also, let's look at the valuations. Largely, we could say neutral, but the outlook is something which the management is quite bullish on. So let's give in the entire KYC ratings for the company, and right now is going to be 5.5 out of 8. It's largely in line to positive on the average numbers which I generally give, but there is an interesting take. There's a history of this company coming in KYC for the third straight time they have come. So let's give you the entire picture. First time they came in March 2025. It was around 5.5 out of 8, first time from the IPO. After that, early this year, they came a minor dip, but now they have regained it back in the May 2026 in today's KYC as well. So this is the entire KYC report card for IGI as well. But to understand more, we'll be joined in by the management. He's Ishwar Iyer. He's the global CFO of this company, and interestingly, he has been at this helm from October 2023 onwards. Now we are joined in by Ishwar Iyer. He's the global CFO at International Gemological Institute. Ishwar, it's always a pleasure to have you in NDTV Profit. And of course, first foremost, a good set of numbers coming in Q4. Of course, Q3 also last time we spoke was strong as well. And the question is, does this momentum continue in FY27 as well? Because there is a hint of uncertainty all throughout the globe. So how do you take that?
Yeah, thanks. It's a pleasure to be on the show. Thank you for having us here. Yeah, we've had a extremely strong, actually 4 quarters, 4-5 quarters post the listing. Yes, there are uncertainties that we all are grappling with. We've given a full year guidance again at around 15% of revenue growth and 20% EBITDA growth. So, and as the year starts, it's been a strong first, quarter 4 for us now.
So right now and right now you have
shifted. Yeah.
Right. So will there be any accounting adjustments also in the coming, or
no? There is no accounting adjustments. It's just that versus the classical 12-month reporting report out, I think we have now coming with a 15-month report. And just to ensure that there is adequate comparatives, etc., our investor deck is also capturing a corresponding 15-month comparison versus for the previous period as well.
Exactly. So as an analyst, it got a bit like,
because
too much on 15 months and 12 months. But anyways, the certification segment, the volume growth, you spoke about the numbers, it's fine, but the certification, is there some kind of a tailwind happening here? Because you mentioned in your presentation that now LGD becomes a volume play. What does that mean?
See, I think just to give a context on how the LGD is evolved, the US market has been the first adopter of lab-grown diamonds. All of the manufacturing sits in India, and that's the reason most of the certification also happens here in India. So it's basically a made in India product with a made in India certification body as well. And because of the affordability that it works with, I think there is a lot of scope for the Indian consumer also to come into play. And that is what we are also looking at, because while it's today in the US, most of whatever gets manufactured here goes to the US. In due course of time, I guess the Indian consumers will also come into the fray. And that's the trend that we are also seeing over the last 4 or 5 quarters. Because if you were to look at our lab-grown jewelry certification business, it's pretty small now, but it's growing at a healthy 25-30% range in the last 3-4 quarters. This quarter was around 29%,
right.
I guess.
And
yeah.
the margins front also, Ishwar, I was just looking at it. There's a good contribution coming from the studded segment also. Do you think this trend continues? And if yes, what kind of margins we are looking at?
See, over the last 4 or 5 quarters, I think our margins has been pretty consistent. Plus, I think it's been always plus 1 or 2. But I think importantly from the company standpoint, there are significant investments that we are making. There is, I don't know whether you've been able to notice it, we co-sponsored the Ladies World Cup last year.
Okay.
We are also now partnering with Gujarat Titans for the IPL.
Anything on the FIFA World Cup?
Not yet. We'll have to think through that. But I think we are also making significant brand investments because the need for a third-party independent certification body is far more important today than the past.
So, Ishwar, that means if you're doing a significant brand investment, so your expenses would be coming in. So, a little bit of margin pressure would be there if you want more visibility.
We hope that with the volume throughput that's coming in, and just to address your first question as well, I think significant capacity additions are also happening in this segment because as I mentioned, probably the Indian consumer also comes into play. There's a lot of retail activity also going on in terms of number of outlets that are getting open to sell lab-grown jewelry. So there is a lot of interplay at the moment which is happening. And with our operating leverage that we have, some of this volume throughput also enables us to therefore getting good cash flows from
And literally you do not have a major competitor in India and you have most of the market share also. You're having a lion's share of it. I just wanted to understand there's a lot of, Middle East issues, West Asia issues coming in. You also have offices in Dubai and Abu Dhabi. Is there an impact there happening?
See, I think at the early onset of the war, obviously we are concerns. I don't think the business is that important.
So nothing coming on the numbers in first quarter?
Nothing that's come on the numbers, but I think we are very cognizant to ensure that our people are protected there. So business obviously takes a backseat when you have such issues there. So I think our paramount important aspect that we wanted to start with when the war started was to ensure that the people there is safe. But they've been able to manage the transition pretty well. I don't think there is too many issues.
So
we have an office only in Dubai actually.
Fine. Okay.
We have an office only in Dubai. It's been okay. I don't think there has been anything to worry about at the moment.
Right. And there's a lot of bullishness coming in your commentary for the AGL, the American Global Institute. We spoke about it. And this time we can see that the conviction coming in. If this conviction comes in, by when can this conviction come in your numbers? The benefits, when did that number start accruing and why this acquisition is important?
Yeah, I think to address your last question first, this is a strategic investment that the company has done because our services is restricted to diamonds. We wanted to enter gemstones and AGL is a leading brand as far as gemstone certification is concerned. So that is the thought process behind doing this acquisition. But the important thing to also for everybody, the audience also to know is you can't scale it up overnight because this is high competence, highly skilled work that happens. And this is a 10-11 man organization based in New York. So you have to build that sort of structures and infrastructure to do this grading elsewhere. See what happens is with that, the skill set that they have and the geographical presence that IGI has, there's a good marriage that happens. Now, how do you translate that into getting new offices in, because we have Jaipur is a very large market for gemstones in India. Thailand is pretty big, Dubai is pretty big, China is also getting very big. Now, how do you build that competence across the other offices in terms of recruiting skilled labor?
So it is still a work in progress.
Yeah, it's absolutely a work in progress. The integrations have happened. We have also talked about 2 months of revenue that seeped into our numbers this year. It's given us an incremental 2% revenue growth as well. But I think the
real chunk will come.
Absolutely, the real job starts now for us in terms of building that capability across our offices.
So we can expect 2-3 quarters.
I think absolutely 2-3 quarters. I think let everything settle down at the moment. I think there's a lot of work that's gone in terms of integrating financial processes.
So it's going to take time, but nevertheless, on a full year basis, the benefits will start coming in. And the diamond prices, that's a concern. The prices have fallen, and I'm talking about the last 2-3 years. The stock, you could say the price is down 50%. So does that impact the volumes or the purchasing decision?
I think while the price is corrected sometime in 2024, but we have seen a lot of stability since then because beyond a certain base price fall, the profitability and the commercials of the growers also get impacted. So we have seen that sort of stability at least on lab-grown wholesale prices. But you must understand that the retail prices are significantly, they are holding firm because they're like 5-6 times at price at what it's
the diamond prices.
Because there's a brand play brand at play.
But we have been seeing also so much retail
and investments coming in.
जैसे एक diamond का दुकान है तो उसके बाजू में lab grown diamond की एक छोटी दुकान आ रही है, and that's what we have seen the trend happening across all the high streets which I have visited. I have seen that. But there's a gap widening. Is there a certifications gap widening between LGDs and natural diamonds right now?
No, I think, see, the 4 C's are what determine the commercial value of the diamond, be it natural or lab grown. So without the 4 C's, it's impossible to do a trade between the various players in the value chain.
And just for information, what are the 4 C's for the people who are tuning in for first time?
Yeah. So this is cut, color, clarity, and the carat weight.
Cut, color, clarity, and carat weight. So these 4 things are there. You should remember that.
These 4 C's determine the commercial value of a diamond. It's akin to a 18 carat or 24 carat or a 9 carat gold. So this 4 C's is what determines the value of the diamond, and that is very critical. So regardless of whether it's natural diamond or lab grown, IGI provides 4 C's for both. So
right, that's pretty much interesting.
Yeah.
And the last question I need to ask is the market share, because you already have, there's a range there. I couldn't find it in the investor presentation. Last time we spoke, it was between 55 to 90% on your key categories. Any gain which has come in any category?
You see, I think for us, an important prerogative has been to get into natural diamond space because
that's roughly 65% of your revenue.
I think since India we have probably that level, but globally we must be around 20-25%. So I think the largest market obviously is the US. So that is an important aspect for us to drive, and that's something that we're trying to work on. The natural diamond business also grown 18% over the 15-month period, and there was some 10% this quarter.
Right, so that's a pretty interesting take coming in. But yes, this time, from the last time we spoke in KYC, and from now, there is a stark improvement, in the company's, vision as well. So very interesting story. It's always a pleasure to talk with you, Ishwar.
Same here.
And that's the interesting story of International Gemological Institute. And stay tuned to KYC and NDTV Profit for these interesting stories.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's actually how to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's actually.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and this is a show that solves all your money problems and helps you grow your money. And that's why today we thought of taking up two very, very interesting topics. The first one that we are going to talk about is how you can invest in global markets via the Gift City. What is Gift City? How you can go ahead and invest? What is the minimum requirement of amount? What are the tax implications, etc. is what we're going to discuss in the first part of the show. And the second part of the show, we are going to talk about how you as a retail investor can actually invest in unlisted space, not just stocks, but unlisted businesses. How can you be a part of their growth? So these are the two very interesting topics that we're going to take up in today's show. But let's start with how can you go ahead and invest in, via Gift City in the international or global markets. And to take this conversation ahead, we're joined by Jay Kothari, who's the head international business at DSP Asset Managers, joining us now. Jay, thank you so much, first of all, for taking out the time. I'll start with a very basic question, for a lot of people to kind of understand as to what exactly is Gift City and how does it allow Indians to kind of invest globally?
Sure, Mahima. First of all, thank you very much for this opportunity and for having me on the show. In terms of the Gift City, it's, very simply put, GIFT first, it's the Gujarat International Financial Tech City. So that's the kind of, the extended version of what GIFT usually kind of people mention. And it is India's answer to what, Mauritius was or Singapore is, or whether it's Ireland. So when it was an intention for having a global financial hub right here in India, and it's kind of based in Gujarat, in Gandhinagar. So the initial kind of thought was getting the offshore onshore. That is, the fund managers who used to manage global capital from, say, Singapore or Mauritius or, rest of the world, bringing back to India or getting those kind of the brain drain, which usually happens, to get them back to India and kind of manage capital from India. And there is an extension to the GIFT City as well. So it was not only about managing global capital into India, but also our own money, that is your money, my money, all the retail investors or other investors in India who want to invest even globally through the GIFT City, they can kind of invest. And I think a very important kind of aspect, which is probably not known to many, is that GIFT is also a unified regulator. So just the way we have, SEBI, RBI, PFRDA, IRDA, the IFSCA kind of subsumes all the